Good morning, everybody. We are live for the market open, folks. We are starting early because we've got some jobs data. We have some jobs data, and quite frankly, this jobs data is actually pretty damn good. Let's get right into it. We beat by double. 130,000 jobs versus 70,000 expected. We have beat on the labor market.
Jobs Wednesday, not necessarily a Friday, but every bit as important. Non-farm payrolls for January coming in twice expectations at 130,000. 130K, that would be the juiciest going back to April of last year when it was 158. Now, if we look at a couple of months worth of revision, they came in at minus 17,000. Now, let's look for average hourly earnings month over month, up 0.4. That's 1/10 higher than both looking back and looking forward. 0.4 would equal October last year. You are all the way back to the summer of 24 to find a higher month-over-month earnings number. Let's go year over year. 3.7 exactly as expected. 1/10 light to 3.8 in the rearview mirror. So how does that stack up? 3.7 would be the lightest since it was actually 3.6 Thanksgiving of last year. Now let's look at hours worked, shall we? 34.3. That increase, that's a good thing. That's up 1/10 from both what we were expecting and our last look. 34.3 would equal November. To find a higher one, you're all the way back to March of 24. Now the unemployment rate, maybe the most important number of all, and it moves down 1/10, 4.3%.
Bro, unemployment came down. I don't know about you guys, but I was not expecting this type of jobs report. We beat expectations by 100%, and unemployment came down. Now, obviously, that means the rate cut probabilities for March also came down, but I'd rather have more jobs than be begging for a rate cut, especially given the expectations were that we were going to come in at negative job growth in January. I mean, this is a really, really bullish report, and that's why the S&P 500 is going positive in the pre-market.
All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More good news, 62.5. That would be the best since it was 62.6 in April of last year. And drumroll, please, the final number I'm going to give you is U6, the underemployment rate, and it comes in at 8%. 8%. Last look was 8.4. 8% would be the best going all the way back to July when it was 7.9. Now, for the bad news, but expected bad news, we're looking at benchmark revisions from April of 24 to March of 25. The original number that we were looking at was around minus 900,000, comes in at minus 862,000. So the benchmark revisions are a little less than expected, but some were actually thinking it'll be in the 700,000 camp. So that comes into minus 862.
I mean, this was a great report across the board. Non-farm payrolls, 130 versus 65. Unemployment rate, 4.3 versus 4.4. Even the participation rate went up, 62.5 versus 62.4. Average hourly earnings month over month also went up. Private payrolls, 172,000 versus 68,000 expected. Now, I know the question then becomes like, do you trust these numbers? Do these numbers make sense? How do they coincide with the JOLTS data that said we lost 500,000 jobs? Look, I'm not here to figure out if we can officially trust the numbers or not. I can only go by what the BLS says. And if they're telling us we added 130,000 jobs, and I'm sure when we go deeper in the report, there'll be some other numbers that we can look at to kind of understand why. Also, the Challenger jobs data we got last week that said we lost 109,000 jobs in January. A lot of that was UPS and Amazon seasonal workers. So that might have like misconstrued the idea that January was going to be horrible. So far, it's kind of okay. So if this data is real, which obviously the market is going to start to interpret as real because the market can only go by the data that they have, we will obviously talk about Robinhood down 10% in the pre-markets. We'll get into that as well. Vertiv up 19%, Shopify up 10%. If this data is accurate and we have actually added double the amount of jobs that we thought we would lose, I mean, that's bullish. That's definitely bullish. It's not bullish for the rate cut, even though we probably still should be cutting rates for a variety of other reasons. The probability for that March cut has, well, it went from 20% to 5%. So there you go. Yeah, we're definitely not getting that March cut. But people having jobs probably matters more than getting a rate cut. And so this is really good. If you were on the market close yesterday, we looked at a clip of Peter Navarro basically saying we need to reinterpret how to think of the jobs data. And it felt like a signal that he was trying to tell the market, hey, the jobs data is going to be ugly, but like you should readjust your expectations. That didn't happen. We ended up getting really, really good numbers. I mean, I don't know how we could have got more bullish than this in terms of numbers. Again, not bullish for rate cuts. Definitely not bullish for treasury yields because the bond market wants more, I guess you could say, deflation / less demand in the economy to be able to warrant inflation coming down so that they can buy bonds. So yields are up right now, but they're still below 4.2, which is nice. They were at 4.15 yesterday on that retail sales data that came in worse than expected. But as long as we have jobs in this economy, we will have earnings growth. We will have disposable income. We will have people being able to pay back at least some of their debt when it comes to credit cards. And if you don't have jobs, everything falls apart. So from that perspective, this was a very bullish report. And hopefully the market starts to price that in as well. So there we go. Good morning, good morning, good morning. Thank you all for being here. I don't know why you guys are all talking about the same thing in the chat. I'm talking about the jobs data. I don't know what you guys are talking about. I'm talking about the jobs data. You guys are talking about something else. I want to talk about the stock market and jobs because that's why we're here, not around whatever else you guys are talking about. But yeah, this is a good report. This was a really, really good report. Shopify, we'll get into Hood in a second. Shopify, they crushed earnings. That's up 11%. Congrats to Tanner. I know this is a big position for him. And he's held this stock for a very long time. Shopify got really smacked over the past couple of weeks with this SaaS slowdown. They beat on the top and the bottom. Free cash flow was at a very strong level for Shopify. And that's why that stock is moving higher. Actually, they missed on EPS, but they missed by like 3 cents, but they beat on revenue by 2%. Their free cash flow, I think, was the big story. And that's why the stock is getting a move. Shopify, again, they're one of those consistent companies that you know is going to compound. Expensive, but they compound. They execute. Revenue's up 31% year over year for a company that's already worth $200 billion. And that's been doing this for a long time. So Shopify crushed it. And then Vertiv, which is a candidate to get into the S&P 500, liquid cooling for data centers, they also absolutely smashed earnings. They missed on revenue very slightly, 2.88 versus 2.89, but they beat EPS by 5%. Guidance was really good, and it should be because data centers are being built like crazy by all the hyperscalers. So obviously companies like Vertiv, SMCI, they should give good guidance, even if their margins are not the best. Vertiv does have a lot better margins than SMCI. I know a bunch of you guys are in this stock. EPS up 37% year over year. Revenues up 23% year over year. This company also crushed it, and they are up 18% in the pre-market. So, I mean, we needed a good jobs data for us to be able to like begin the process of not kind of falling prey to reversing the gains that we have made over the past 3 days. Remember, last week was ugly, kind of reversed most of that on at least the indices, even if not on individual stocks. And I did not have good expectations for the jobs data because the jobs data was bad. Although the rate cut probabilities would have gone up, we probably would have tanked. Jobs data was amazing. If you're just joining, 130,000 versus 65,000 expected. And that is why the S&P, look at that, 0.5% up in the pre-market, 695.75 on the S&P. Maybe this jobs data takes us to all-time highs today. It doesn't have to be 700, but if it gets to 698, 699 would not be crazy to see if we get that. All right, let's talk about Hoodie. Let's get that out of the way, and then we'll get into all the other headlines. We have a nasty 9% print on the Robin of Hoods. A lot of thoughts and commentary over the past 24 hours. If you were to go on X, everyone has become bearish on Hood. I actually kind of like it. Everyone just completely changing their entire mentality on Hood and how they think of it. And, you know, this is where you have to have a sort of calm outlook and actually look at the earnings and try to understand what's going on. One of my favorite analysts, Devin Ryan, I got his note this morning. He has maintained his 180 price target with a market outperform. He has a very in-depth report. And the summary of his report, I'm not going to go through everything, but the summary of his report is there are a lot of different catalysts for Robinhood going into the next 5 years, particularly in 2026. Vlad was pretty confident about talking about all the things they have in the pipeline going into this year. And the street is annoyed about crypto revenues, which we kind of already knew. The stock got cut in half because of that reason. So it's not like that was something new. And they missed on revenue. And the reason they missed on revenue is because the street got a little bit more excited about the spread they were charging on crypto and options. Robinhood actually ended up decreasing the amount of spread they take on crypto and options in Q4. And that led to a $70 million miss on revenues. I think it's a very inconsequential miss. The company grew 34%. They put up $1.28 billion in revenue. The reason revenue is deaccelerating is because last year they were growing from a $500 million base. So when they put up $1 billion, they grew 100%. This year they're growing from a $1 billion base. So when they put up $1.28 billion, they're growing 30%. That's why it's declining revenues. But that's something that was priced in. That's also not something that I think people should be too concerned about. Net income, $605 million, AUC, $324 billion. That's up 68% year over year. Net deposits, $68 billion left other platforms to come to Robinhood. That's up 35% year over year. Just in January alone, they added $5 billion. Robinhood Gold, that's up 1.5 million subscribers year over year, up 58%. And then revenue, again, 27% year over year. Vlad played pretty strong to his mission. Our vision hasn't changed. We are building the financial super app. The red flag in this quarter is very simple. People thought expectations would be higher in the context of how options income and crypto income would inflect for transaction revenues. And along with security lending, there was a reason for why that didn't go up. IPOs were a bit down. So the shares that were available to borrow also went down. And as a result, that one got hit by about 60 million. But outside of those three reasons, nothing in terms of the long-term thesis on Hood, in my opinion, has changed. And the biggest thing I think people had an issue with yesterday is that 60% of the questions on the actual call was about prediction markets. And people are very polarized on prediction markets. Some people hate it, some people love it. At the end of the day, if you hate it, you sell the stock and you leave the platform. If you're neutral to it, then you understand at the end of the day, it's a business, and that business is going to either accelerate or deaccelerate, and the street's going to judge it based on how the business grows. And from what we're seeing in prediction markets, it is growing at an unbelievable rate. One of the most exciting things they said is that they've already done $4 billion of volume in the first month and 2 weeks of 2026, which is more than the entire month of last year for December when it comes to prediction markets. And it's growing, and it's growing at a pretty fantastic rate. And the big thing that I think Vlad highlighted is that outside of sports and sports betting, which, yes, is a form of gambling, I'll concede that, and people hate that. That's fine. If you hate it, then leave the stock. Vlad is saying that there are a lot of other asset classes, or a lot of other, you should say, events that are turning into asset classes that are being predicted on versus just sports, NBA, NFL, etc. And as a result, that's why he's pretty damn bullish about what's going to happen to this asset class as a industry for prediction markets. He thinks it can lead to trillions of dollars of volume. And, if you hate it, you hate it. But if you see that growth potential, Robinhood, all these other companies, IBKR, that also has prediction markets, everyone's going after it because they know this is the future of how people want to trade, hedge, engage in the prediction markets. And if they weren't a significant player in this, I think it would be a much bigger issue. Tokenization, that's expanding. Europe is expanding. Southeast Asia is expanding. Banking, they have 25,000 people on the banking app, just 25,000. And they have $400 million inside of banking of 25,000 people. 50% of the 25,000 have signed up for direct deposit. And when you get people's direct deposit and you get their paycheck coming in every week, I mean, that's just consistent compounding of deposits. Robinhood has 27 million users. They have 25,000 people rolled into banking. I mean, the amount of growth that they can expand going into this year. I just think people are really underestimating the long-term growth story, or even forget long-term, the 2026 growth story, because the stock is down. And again, the stock should be down. They missed on revenue. Like in this market, if Microsoft and Amazon are beating on all their metrics and still going down 10%, Robinhood's not going to get away with missing on revenue and then going down by 10%. Like, it is what it is. Like, and so I'm not even upset that the stock is down. I think I was a little bit more upset that people are just like so upset that prediction markets are now incorporated into Robinhood, and they think it's the worst thing that Vlad has ever done, and he's an evil human being. It's like, if you really feel that badly about it, then okay, I get it. You can leave the platform. But I think they're using that excuse as a scapegoat because they're mad. If the stock was up 10%, no one would be saying this. And that's my barometer of if it's a good quarter or not. Like, Amazon spending $200 billion on CapEx. If the street was happy about that and the stock went up 10%, none of these analysts would be upset that, like, the street would be like, oh, wow, street likes CapEx. All right, upgrade, more CapEx, even if negative free cash flow. But the stock goes down. So the narrative has to be, well, we have to readjust our price target because, now the street doesn't like the CapEx. and negative free cash flow becomes bad. So I think this is more rooted in the actual stock versus the earnings itself. But I understand why the stock is down. It would not surprise me if this stock dumps into the low 70s today. I don't think that's going to happen because we got a really good jobs report. And at the end of the day, 8% down after being down 40% from the highs, I think is enough of a haircut today for Robinhood. I think I used that term because a lot of you guys seem to be using that phrase in the chat I don't know why you guys keep mentioning that, but I think it's enough of a haircut. And sometimes as we grow older, we all have to get haircuts. We have to grow up a little bit and move on with our life. So, Robinhood's becoming an older company, and it doesn't just go up and to the right. Sometimes it needs to take a haircut, reset. I think it's actually a really healthy reset. If we actually get into the low 70s, I will be a buyer today and see if we can add to the position. But this company is going to start trading at below a 30 PE for the growth they're putting up. People are now starting to doubt the growth expectations, and I think that is not the best thing to do. Now, if we get a bear market, yes, all bets are off the table because Robinhood is still contingent on trading volumes. But again, banking 25,000 out of 27 million people, 400 million in deposits, 50% direct deposits. They grow that to 1 million people. I mean, we're talking about extreme growth in assets, and more assets just means that the platform will continue to get better. So we're going to see what happens with Hood today. As Josh Brown says, shut up and buy. Yeah. And look, again, I understand why the stock is. I'm not trying to defend that the stock should be up 10%. I'm not saying it was one of those quarters like, oh my goodness, the street has this completely wrong. Microsoft, I think the stock should have been up. Amazon, I think the stock should have been up. Robinhood, they missed on revenue. It is what it is. And even if revenue is an expectation made up by people on Wall Street, if you miss, you miss, and that's the issue. Now, a bunch of analysts did decrease their price targets today outside of Devin Ryan. I think that's okay. Barclays cut their price target to 124. KeyBank cut their price target to 130. Compass Point cut their price target from 127. All these guys had it at about 140, 150. They cut it down by $20. It's reasonable. I mean, if they're going to miss on revenue and you think they're not going to grow as much as they're going to grow this year, then yeah, you can cut your price target by $20. As your model suggests, hey, this stock probably is not going to get back to the 150, 140 range anytime soon. But their price targets are all 45% above the current price. So I think decreasing it by $20, $30 and the stock still being hit as it is relatively bullish given, they're not bringing the price target down to 90. If you saw price targets go from 150 to like 85 today, something bad had happened. Something bad didn't happen. It's just trading volumes are down a little bit. So you take the price target down about $20, but that doesn't inflect in terms of the broader growth story. Devin Ryan, again, still reiterated 180, and he thinks the growth is just getting started for Robinhood going into 2026. All right. So that's what we got. That's what we got with Hoodie. You guys are all still talking about something in the chat. Have my girlfriend admit what is going on? What is being said in this freaking chat? Yes, I got a haircut. Okay. I got a haircut. Icy, thanks for the $50 super chat. You did not have to send $50, but I appreciate it. Looking sharp. The market likes it. Eggs and tacos amidst haircut symbolize the stock market took a haircut and looks interesting now. Your mom must be over the moon. Yeah, my mom was definitely happy. She's been asking for this for like 10 years at this point. No, what happened is I've been working with a hair consultant, and I was supposed to have a meeting with her last Thursday. And she had a family emergency. She couldn't make it. So I didn't need to get a cut because like things were just getting a little, like it was getting insane. I didn't expect it to get this type of a cut, but then I met a new barber and he was just looking at it and he was like, bro, if you do want to get that type of curvy, luscious, like look that you're going for where your hair curves, you guys have seen it before where like you need to let your hair grow together. And the problem is like my hairline was growing the hair on my hairline was growing faster than the hair on the sides and nothing was leveled up. And he was like, if you really do want to get back to that type of style, it needs to grow together. And right now, like one is growing faster than the others are going slower than the others. And like, you just need to level all of it and let it grow together for it to happen. And that's what the hair consultant told me as well. But she just said, you know, it'll take time. You don't have to cut everything off, but it'll eventually like blend into each other. And then the barber was like, yeah, you could wait 6 months or you could just chop it all off and then let it all grow together. And I was like, all right, whatever though, just do it. Like it is what it is. Who cares? It's time for a change anyway. So that's what we got. And Amit, I could have given you this consultancy for free. I'm not going to lie. Pretty much all of you guys have been saying to cut the damn hair for like 4 years. For those that have been here since 2022, you guys have been saying to cut the damn hair. it's done. I kind of like it. I feel kind of liberated, to be honest. Because I kind of don't feel like I need to wear the hat. Again, the only reason I wore the hat is because my hair is crazy, right? Because there's so much of it. So like I wear the hat to like calm it down. It kind of looks like I'm wearing a hat even without the hat. It's not a full buzz cut, but also it's not like this. Like this was 2022. For those that this style was GQ meets Al Qaeda. Okay, that was the style. That's kind of the look I was going for. But the problem is it needs to grow up to, if I want to get back to that and get to that GQ Al Qaeda look, it needs to grow together. So yeah, it is what it is. And so short hair. It's kind of crazy though, bro. It's kind of crazy, but here we are. We took a haircut. Robin took a haircut, and now we can both hopefully do what we need to do to make the next leg up. And that's what we got. These comments are great. Oh my gosh. These comments are great. No one even cares about Robinhood earnings today. No one cares about Vertiv. No one cares about Shopify. No one cares about anything. Amit definitely has a girlfriend now. It's not because I have a girlfriend. Although, yes, there is a saying that when you do get a girlfriend, you start leveling up, especially in your looks. But look, it was time. It was time to make this happen. All right, so let's get into the rest of what's going on in the market. Again, for those that have just joined, the January jobs report was really good. Was really, really good. It's because you have a boyfriend. Okay. The jokes are going too far. No more boyfriend jokes, okay? Now that I got the haircut, no more boyfriend jokes. You can't make the boyfriend jokes anymore. I got the freaking haircut. I did what you guys wanted for the past 3 years. We got to stop the boyfriend jokes. Although by me saying this, we are just going to accelerate the boyfriend jokes. Grab earnings is tonight. Grab earnings is tonight. It's not right now. I will be live at 7:30 for Grab earnings. I hope to God Grab does not take a haircut because that's not going to be fun. But look, I went through some of their numbers this morning. Dude, this stock's undervalued. I'm not saying buy it before earnings. I'm saying the stock is undervalued. I hope they don't sandbag growth. It doesn't tend to move that much on earnings, but they can put up some decent guidance. Hopefully Grab has a good quarter. Now, after the bell, we have AppLovin, we have McDonald's, we have Cisco, we have HubSpot, and we have QuantumScape. I think we have a couple other companies, but those are the big ones. AppLovin's the most important. And then at 7:30, we'll have Grab. We had Shopify this morning. We also had T-Mobile. Again, let me pull up some of the other earnings we had. But Shopify and Vertiv actually crushed. Again, jobs data, the one you're looking at right here, 130 versus 65,000 expected. 130 versus 65,000 expected. Participation rate is up. Unemployment rate went down 4.4 to 4.3, and then private payrolls went up. So if we get some good momentum in the stock market today, it's because this jobs data that I at least thought was going to be very ugly turned out to be pretty damn good. And although that's affecting yields going up and it's affecting the probability of rates going down, people need jobs, and it's good that we had a pretty good jobs report. Unity, they beat by 14% on EPS. They beat by 2% on revenue. EPS is up 20% year over year. Revenue is up 10% year over year. Unity is down 24%. My goodness. I guess the street is not happy about it. So Unity, we know that Google's Genie thing ended up messing up this stock along with Roblox last week. The AI names, Upwork. I mean, if it feels like AI is commoditizing you, that's going to hurt you. So Unity is down 24%. On top of that, you have, what's the other one? T-Mobile that had earnings today. They missed on EPS. They beat on revenue. T-Mobile's down about 4.73%. Missed by 9% on EPS. They beat on revenue slightly, 24.3 versus 24 billion. So that was a beat. Then you had Humana. They beat by 1% on EPS, negative 396 versus 399. They beat by 2% on revenue, 32.15 versus 32 billion. That stock is down 7%. So more of these healthcare names taking a hit based on these earnings, but Unity being the worst right here, down 24%. Shopify crushed it. Vertiv crushed it. Both of those stocks are up. Yeah, the dollar, let's take a look at that. We don't have any update on the Clarity Act. We did have a meeting yesterday. Nothing crazy came out of that meeting. Dollar's at 96. That's up a little bit based on this report. But yeah, I mean, crypto actually kind of took a little bit of a crap this morning. Bitcoin right here, 67.6. It just went green. It got all the way down to 66 at one point. So you're seeing crypto get a little bit of rebound. That's also probably why Robinhood got hurt even more last night. So when the market opens, I mean, we're going to see, look, Hood was down 10% at the worst. Now it's down 8%. Not saying it can't go back down there, but that jobs report was definitely really important to at least get a little bit more momentum to the upside. Michelle says, today's my brother's birthday. Happy birthday to your brother, Michelle. Debating on an Astros cake or a Happy Gilmore cake. Last year I made a golf ball, year before a golf bag. Michelle, you need to make me a Robinhood Palantir cake. Michelle's in Texas, so for the Austin meetup, I am waiting for a Robinhood Palantir cake. Not Matthew, thank you for the super chat. Now CNBC will let you on. Thank you for all you do. You know, I think it will be easier to make media appearances without having to wear the hat. So maybe Bloomberg and CNBC are more likely to to invite me onto the show. I appreciate that. Thank you for this. And then, yes, OSS did get another contract prototype this morning. I believe the ceiling on this is 15 million. So Top Fan, thank you for the $50 super chat. OSS didn't really get a reaction. Yeah, now they're up 4%. They were at 916 when I checked it an hour ago. So they're starting to get a better reaction. That stock getting back to 1050 would not be crazy on that contract prototype. Again, OSS, it's a little bit of a moonshot, small cap, but based on the edge compute thematic. Also, I'll be live with Stock Talk today at 12:45 on X. We'll be discussing a new ticker. The ticker is SYNA. Another name in that broader semiconductor edge compute theme. So we'll be doing an entire 45 minutes, probably in an hour spaces on this at 12:45 Eastern. That'll only be on X audio. And so for those that are interested in that, you can tune into it as well. But yeah, OSS got a really good contract this morning, and that's helping them as well. All right. So what else do we have? You guys seem to only want to talk about one thing in the chat. It seems like no one cares about the stock market today. AEHR, Air Test Systems, they had earnings. That's up 15%. Okay. Not too bad. That one's getting some momentum. I know Roy likes this one a lot. Looks like they had a relatively good earnings for them to get this type of move. Or it's not earnings. They announced an initial order by a hyperscaler for their packaging part build-in. Wow. See, these smaller companies are going to get bigger deals. Grab earnings is tonight, not right now. It's not in the morning, it's in the night because Singapore is 8 a.m. when it's 8 p.m. for us. From these hyperscalers, right? I mean, if they're spending $650 billion on CapEx, yeah, it makes sense that these smaller companies are going to get more of these deals. This customer's current generation AI processor is already ramping in volume production today, and they are forecasting a very large expansion of Sonoma system purchases for that device in the second half of calendar 2026, continuing into 2027. Yeah, it doesn't look like the CapEx ecosystem is slowing down for these smaller companies. Nebius is tomorrow. I also think the CapEx should continue to help Nebius. I mean, they should be fully booked out, just like a lot of the other neo clouds. And if they are, not saying the stock has to go up, but definitely doesn't have to get hit as badly as some people may be thinking. Shopify right there, that's up 12%. Ford had earnings yesterday. That was up 1%. Lyft, I don't know why Lyft took this big of a haircut, down 15%. They beat on the top and the bottom. Guidance was also not bad for Lyft. So I don't know what the street hated on this one. I mean, expectation was 1.75 billion. They put up 1.6. By the way, they had to pay 168 million in legal and tax charges and settlements. If not, revenue would have been 1.8 billion. So they would have beat if it wasn't for a tax charge. So if it's down because of taxes, I don't know. Gross bookings was at 5 billion, up 20% year over year. I don't know. It is weird why they got hit this bad, but they did end up getting hit. Now, again, Lyft was attractive when it was $9. And if people remember back in 2023, I actually was really interested in it because their free cash flow margins were going up by like 60% year over year. Like they were doing something really right in the business to expand free cash flow. But now, I don't know. It just, a lot of the alpha, I think, happened from 9 to 16. I think it got to 22 at one point. And now it's kind of stuck. Not saying the stock can't do well, but if Uber is going to be getting hit and Uber has way better financials than Lyft, then Lyft probably is going to be hard to move as well. VRT, again, we talked about it this morning. Massive data center demand. They continue to show this is a very important company in the data center space. They are likely getting to the S&P 500 this year. That's up 16% in the pre-market. Let me know if you own Vertiv at all. But I mean, look, the data center derivative plays going up is good. It's bullish to see. It makes sense. I think it's kind of stupid that Microsoft and Amazon, the ones that are spending the CapEx, are down. But all the smaller companies that aren't multi-trillion-dollar companies that are getting the benefit from the CapEx, I mean, they're going higher. And they're going higher for a reason. Gene Munster, who was actually a little bit bearish on the AI build-out, came out yesterday. He's been analyzing these AI stocks for the past couple of years now. He thought we were basically 18 months away from the end of the build-out. He now thinks we're about 4 years away before the build-out ends. Now, maybe that's too aggressive, but to go from 18 months to 48 months on the overall build-out, which means he thinks CapEx is going to continue accelerating over the next 4 years, is likely getting him to think, from the industry checks that he's done, and Dan Ives kind of feels the same, that there is so much demand. I mean, we looked at TSM numbers, 37% year over year in January. Yesterday, they were disclosed 14 billion extra on CapEx. There's so much demand, there's so much growth, and there's so many other verticals like robotics that haven't even taken off yet, that this CapEx cycle might not be slowing down. Now, I don't know if we have 4 years, but we definitely have, I would say, more than one. And earnings multiples that are, going below 20 on the mega caps doesn't make any sense, given the build out is not slowing down. By the way, Morgan Stanley and Charles Schwab, the reason they fell yesterday was because of AI. It was almost like Anthropic released an AI brokerage. Not really, but that's kind of what it was like. Here's some coverage on this, but that is why a lot of those banks took a big hit in the pre-market yesterday.
It's the private credit parts of alternative asset managers. And yesterday we saw it hitting wealth management firms, including Morgan Stanley, brokerages, Charles Schwab, insurance brokers as well. This all has to do with various tools that are being introduced, whether it be on one platform or another by Anthropic in one way or OpenAI in another when it comes to insurance. The hits keep coming, and we saw it yesterday. You can see Schwab may be rebounding a bit. And it, of course, raises this larger spectrum.
Again, the market is being stupid here. And the market's being stupid for the following reasons. A company rolls out AI tax planning, and you take down a $200 billion company by 8% in terms of Schwab, or Morgan Stanley taking it down 5%, because now you're worried that the legacy banks and brokerages, the reason Robinhood didn't get hit because of this was because Robinhood is more in the AI world. They got hit for other reasons, but it is kind of insane to say Schwab deserves to lose 10% of its value because a much smaller competitor is going to give AI tax planning to all these other companies. Just like it's crazy to say because Anthropic released some new tool for lawyers, ServiceNow deserves to get cut in half. And the paradox here is, if you believe that, NVIDIA deserves to go to the literal moon. If Schwab is going out of business, if Morgan Stanley is going out of business, if Salesforce, ServiceNow, Adobe are all going out of business, not saying those stocks have to go that high, because obviously there are concerns around growth, but Schwab actually is growing EPS very nicely. So the Schwab thing was very confusing. But all those names getting hit because of AI means we're going to need a lot more compute than we expected. Schwab has, how many assets do they have? They have like 10 trillion in assets in total. Like all those are just 11.9 trillion. That's all being automated away by AI tax planners. Like, no, that's not happening. If anything, Schwab's probably going to integrate AI. Like, it's kind of ridiculous to see how these headlines are affecting the streets or these companies in certain sectors as aggressively as they are. But it's unfounded. And I think these are reasonable dips if you were interested in any of these names, because it's the market being the market. But again, if it is as bad as it is, then the AI stocks will catch a bid inevitably, because if Schwab goes out of business because of Anthropic, well, Anthropic's going to need a lot more compute. And so I don't think it's that scary to see this type of sell-off, but nonetheless, at least we have somewhat of an explanation for why they're selling off. But literally yesterday at the market open, or towards the end of the market open, we could not find out why Schwab was down 7%. And apparently it's because of some AI tax planning product that ended up hurting these names. Brandon, thanks for the super chat. Is the market pricing in on the Mag 7 worsened numbers to free cash flow as a part of the ramping capex, and how to digest that? They haven't gotten a bid. My heart says the Mag 7 are going to thrive on other sides from these PEs. Yeah, you've hit the nail on the head. So the market is pricing in that free cash flow is going to go negative for most of these big tech companies outside of Microsoft. Microsoft's the only one that's actually projecting some positive free cash flow, even with their capex. And it's inevitable, right? If Amazon's going to spend $40 billion more in capex, free cash flow is probably going to be lower than expected. Having said that, these are the greatest companies on the planet. And we have to remember a very simple thesis. Why are they spending on capex? They're spending because they're growing. Meta is growing 33%. AWS is accelerating 24%. Azure, instead of growing 39.5, is growing 38%. And therefore, Microsoft loses $300 billion in value. Like, these companies are spending because they're growing. They're not spending for the hell of it. In 2021, they were spending for the hell of it. That was the difference. Rates were going up and these companies were getting bloated for no reason. And I think it's just a fundamentally different paradigm right now. So yes, I understand why the street's taking them down. And quite frankly, these Mag 7 might say depressed all year. To quote Josh Brown, that's when you shut up and keep buying, because eventually the Mag 7 are going to break out because they are the greatest companies on the planet. And even if the alpha is not there right now, eventually will be there. So I don't think it's the worst thing in the world for them to be getting hit on this. So that's what we got with some of those AI headlines yesterday. Now, we do have a couple of other things from Anthropic, given that we're speaking of that also made some headlines as well. Let me pull that up. The EU Commission approved Google's acquisition of Wiz. Yep, that happened yesterday. That was good for Google. Google as well. Dude, Google grew cloud by 48%, and the street took down Google. Now, again, I understand Google was trading at all-time highs, but for this stock to get in to have gotten hit after those earnings is just unbelievable. Not to mention they own a ton of Anthropic and have a big equity stake, which is good for Amazon and Google. But again, the street seems to be discounting that, which is fine. If the street wants to do it, that's what's going to happen. Overall, it seems like momentum is still to the upside. Before I get into that Anthropic headline, I saw this chart real quick last night that I also thought was really important. This is another reason to not be bearish, Robinhood. Daily equity turnover tops $1 trillion. U.S. equity markets are seeing a record turnover, averaging $1 trillion a day. 19 billion shares are going back and forth. Vlad also announced yesterday that Robinhood is now the absolute leader in options across all brokerages. They have number one market share, and that seems to be only growing. So again, they missed on revenue. That's why the stock's down. I can see the stock getting hit more if Bitcoin gets hit. I do think the selling should, I think if anyone wanted to sell Hood, they would have sold by now. So, maybe when the market opens, you get some massive dump, but 8% down after being down 40% for the year, I would imagine a lot of the selling has happened, but we're going to see when the market opens. So this, I think, is another reason why it's overall bullish for Hood. All right, so this is the headline from Anthropic that went viral yesterday. First of all, there was this article that you guys probably read that also went viral. It's this dude who, the article looks like kind of a grift, in my opinion. It's this dude who owns an AI company, an AI writing company, Matt Schumer. The article is called Something Big is Happening. 27 million views on this article. Ironically, he used AI to write the article, and he admitted that in the comments. But the guy owns a company that helps people write with AI. And he wrote an article called Something Big is Happening. The point of this article is that essentially AI is going to take over the world. And I don't know why it went viral, but it went viral. And basically his argument is like, no matter what you think you're good at, the AI will be able to train itself to be better than what you... It's essentially a doomer article. It's not really trying to be a doomer article. It's more so trying to say, hey, the inevitability of AI is that everything ends up becoming automated, including your job. And as a result, like, you should be very, at least concerned, if not worried about it. And, my takeaway was like, okay, Anthropic CEO said this a while ago. So it's like, yeah, we know like AI is taking over the world. The only thing that we can do as investors is hopefully have an equity stake in some of those companies to benefit from the upside of AI taking over the world. Now, that doesn't solve the long-term issue of millions and millions of jobs being commoditized, but also like you can't prepare for that if you're an investor. Like you can't do it like that. At the end of the day, that is a governmental issue. Like the government's gonna have to figure out how to either regulate AI, how to have some type of universal basic income. Not saying those are the best strategies to navigate this, but if AI takes over tens of millions of jobs, like, you as an individual person really can't do anything about that, but you can at least have an equity stake in some of those companies. Also, the more optimistic perspective is that AI creates a lot of jobs. So there's a lot of different viewpoints, but that went viral. It goes to show the sentiment that we have around AI. And then you had this thing happen around Anthropic. One of the key researchers at Anthropic ended up resigning, and he wrote this letter about how, same thing that the reason that article went viral, AI is too good and it's going to like just take over the world and there's nothing we can do about it. And the guy, his name is Murnick. He's now moving to the UK to write poetry as he's quitting his fancy, probably high 6-figure, if not 7-figure Anthropic job. So he wrote a letter to tell everybody, I've decided to leave Anthropic to go write poetry in the UK because the world is in peril, and not just from AI or bioweapons, but from a whole series of interconnected crises unfolding in this very moment. We appear to be approaching a threshold where our wisdom must grow in equal measure to capacity to affect the world, lest we face the consequences. Moreover, throughout my time here, I've repeatedly seen how hard it is to truly let our values govern our actions. I've seen this within myself, within the organization, where we constantly face pressures to set aside what matters most, and throughout the broader society as well. So basically, he's saying Anthropic isn't as safe as they claim to be. Now, remember, Anthropic was started because Dario left OpenAI because he thought Sam Altman was not as safe as he needs to be. So I would argue that Anthropic is probably safer than Sam Altman when it comes to AI safety. But this this new poet who's deciding to go to the UK to just write poetry has made the claim that Anthropic, unfortunately, is not as safe as he thought, and now he's leaving. Look, my gut reaction to this, people might hate what I mean. I just think it's the most privileged thing to say. Like, oh my God, AI is so bad. I have to leave the hottest tech company in the world, probably with my vested equity because I've been there for 5 years, and go write poetry in the UK. It's like, dude, shut the fuck. Like, I'm sorry, but if it's really that bad, then maybe you should be trying to do something about it, or you should be trying to help people, trying to educate people. But if you're just gonna go off and be Mark Twain or some shit with all this equity you have, this guy's probably gonna become a multimillionaire when Anthropic goes public. Like, no one wants to hear this shit, dude. No one wants to hear this shit. In a world in which people are losing their jobs because of AI, because of the company that you're at that's automating this stuff, and you have your fancy equity and salary that you've collected for 5 years, and now you're deciding to leave to go write poetry. Like, no one wants to hear this shit. So he's going to write the poems with Claude. It goes to show the sentiment around AI over the past couple of days has been a bit more negative. And we're seeing that not only in these anecdotal experiences with these articles that are going, the reason that article went viral is because people are resonating with the fact that AI is going to take over the world. The reason this Anthropic guy's post went viral is because people are realizing how much the AI researchers themselves feel like they're hopeless in navigating the challenges of AI. And then the reason the stock market is taking down some of these stocks is because they think AI is so powerful that freaking Charles Schwab with 11.9 trillion in assets deserves to go down 8% because some company has rolled out AI tax planning. So I don't know. It's a weird time to be kind of thinking of how AI is interacting with the world. As an investor, all I see is earnings growth going up and up and up, and CapEx going up and up and up, and this build out happening. I don't know what that means for society writ large when it comes to job growth and how people are going to ultimately find purpose. But as investors, we need to allocate capital to where we think the growth is coming from, and the growth is coming from AI. Robinhood, by the way, mentioned yesterday in terms of AI, 75% of their customer calls are now being handled by AI, which is just incredible. Like the fact that 75% of that is automated with AI and people don't need to speak to a human. I know a lot of people hate that they can't speak to a human on Robinhood, but and that's part of the reason why a lot of people don't come to the platform, which is a very fair criticism. But if 75% of this stuff can be automated with AI, Vlad said that has given us 9 figures in savings over the past 2 years. This stuff is affecting every company, and it's probably going to keep affecting more companies across the entire world. Also, why is he going to the UK to write poetry? Does he need to look at Big Ben or something and get inspired? What's going on in the UK? I thought that was the funniest part. It's like the UK out of all places to write poetry. I don't know. That was kind of interesting, but I just dude, I'm reading this article and I'm like, dude, you're rich and you're going to write poetry. Like, there's a lot of people that are struggling right now and will be struggling. That can't be the message that you think is the most important for everyone to hear. Again, jobs report, very important for those that are just joining. 130 versus 65,000 expected. We were absolutely saved by the bell on this. Absolutely saved by the bell. To give you some context for why, I really thought the jobs report was going to be ugly based on what Navarro said yesterday. He said this at like 6 p.m. yesterday, and it really made me think jobs would be ugly, but jobs ended up being decent.
One thing I want to note, the jobs report's going to come out tomorrow.
Yeah.
We have to revise our expectations down significantly for what a monthly job number should look like. When we were letting in 2 million illegal aliens, they're coming in. We had to produce 200,000 jobs a month for steady.
again, even him saying we have to rethink how we think about, like, that to me was like, oh, he knows the numbers are going to be cooked. Numbers ended up being decent. So, I mean, if we didn't get those numbers, I think it would be a much uglier pre-market. And so far, it looks like the numbers are relatively decent. All right, macro. Let's talk about a bunch of different charts we have. So, let's bring up a couple of bearish things as well, because we definitely have to look at all sides of the story. 12.7% of credit card loans are now in serious delinquency. This is the second highest in history. The last time credit card delinquencies for the percent of balance of 90 days delinquent by loan types went this high was none other than 2008. It was just at under 14%. We're now at 12.7. So we are definitely reaching levels of delinquency in consumer credit that, well, it wasn't sustainable 17 years ago. I don't know if it'll be sustainable this time as well. But if we had a bad jobs report and you put that on top of the fact that people have a lot of credit that goes delinquent and they don't have a job then to pay back the credit, that's when things get really ugly. So yes, we still do have credit problems in this country. And that's also why we need rates to come down in order to get things to be a little bit more affordable to be able to pay back credit. Then you had this chart that I thought was incredibly interesting. Lever tech ETFs are kind of going crazy. There is now a record 108 long and 31 short tech-related leverage ETFs. This is like your NVDL or your APPX. Go 2-3x leverage, longer, short a certain stock. And this is 3 times more than the second largest sector with these levered ETFs, which is financials. This is part of why we had that last week temper tantrum, as I'm calling it. I think there's just a little bit too much leverage in the system. And we had a high beta kind of blow off top in January. A lot of people probably got into a lot of levered ETFs for those high beta names, and it ended up resulting in a little bit of pain. So, I mean, it's probably good we had some of that flush out. Ironically, Robinhood's margin book went from 16.8 billion to 18.4 billion in January. Yeah, there's a 2x grab ETF, GRAG. Like, I mean, grab, really? They're going to 2x grab? Like, it's getting a bit crazy for some of these tech leverage ETFs. And so getting that flush out, I think, was not that crazy. And, hopefully, again, sometimes the market needs to take a haircut so that it can reset expectations, get ready for the next leg higher. And that's not the worst thing in the world. Then I thought this was hilarious. Last Thursday, software was on the brink of death. Yesterday, the software ETF IGV closed 7% above last Thursday's close with a record number of option volume on IGV. By the way, Vanda Research came out yesterday and said that retail in particular has been buying the dip on IGV at the highest of levels over the past 2 days. So, the market got bearish a week ago because they thought Salesforce was dead. Now the market is bullish. I mean, Salesforce is still down significantly from the highs, but you are seeing a lot of people starting to call BS on the software sell-off and say these companies are not going to be dead anytime soon. And if they're not, then that's probably going to be a good thing for the broader economy. And then final update right here before we get into the bell. Mortgage rates near their 3-year lows. Biggest refinance wave since 2022. The average mortgage rate right now, as of Zillow, is 5.91%. A year ago was 6.89%. So mortgage rates are coming down. That's good. If we get rates to come down, the 10-year to come down, mortgage rates, I don't know. I mean, put your expectation by the end of the year, what you think mortgage rates will be at. I think by 5.5% by November is not crazy. I don't want to go lower than 5.5%, but if we do get to like 5.2, 5.3, that will absolutely open up the housing market. And so I don't think we're getting 2.3, 3.7% like we got 6 years ago, but 5.5 would not be crazy to imagine by the end of the year, and that would be good for the broader market. That's what we got. And those are some of the main updates this morning. All right, 3 minutes until the market opens. We will see what happens with Mr. Hoodie. Definitely took a little bit of a dump. Hopefully this is the worst of it. We'll see if the buyers come in or not. But as of now, it's obviously ugly. Yes, to address the elephant in the room, I did get a haircut. Maybe I don't have to wear a hat anymore. Maybe this is just maybe this is just the new style every day. Although if I do wear a hat, it kind of looks the same. It doesn't look that different. So I got a haircut. Robinhood got a haircut. The market took a little bit of a haircut, but sometimes you need that to move higher. Seems like a decent amount of you guys like the haircut. I'm seeing most people say they like it. I mean, you guys have been asking for this for 4 years. So I guess it was time to do it. But we got the job done. We got the job done. It's because you got laid off at UPS. Oh, boy. Will we be buying more hood? I want to see how low this gets today. I mean, let's see if it gets down to below 70. Cute, no homo. You know, that's what my barber said, too. Literally, I swear, my barber was like, nah, bro, you look good. No homo. I was like, okay. Thank you, sir. I appreciate that. Haircut is a top signal. Hopefully not. It was time. It was time to cut it. Traders fully price in Fed rate cut by July versus June previously. All right, so those rate cut expectations, again, they are going away. We were at 20% this morning. Now we're at 5.9% based on this jobs data, which is important. We needed this jobs data. What did you expect him to say? It was his job. I would like to think he actually liked the haircut. But that's fair. That is fair. Why is IWM up? Well, again, the jobs data was good. And IWM, the companies in IWM have been beating against the S&P 500 companies by about 60% on earnings. So small caps are in favor. IWM is beating the S&P by a lot this year. And hopefully that can continue. Amit was happy he was hitting on him and then disappointed when he said no homo. Dude, you guys are crazy, bro. You guys are crazy. All right, here we go. Let's see what happens. All eyes on hoodie. Hopefully we don't get too big of a haircut, even with the miss on revenue, and we'll see how the market treats it. Wednesday, February 11th, 9:30 a.m. Thank you all for being here. The stock market is now open. All right, wake your ass up. Robinhood down 8% on the day. 78.80. The lows were 76 in the pre-market. Would not surprise me if we get back up there. But maybe the dip buyers come in. Maybe that's enough pain on the sell-off. 79.20. If it can get back above 80, that'd be very encouraging. I don't expect that to easily happen, but 7 million shares of volume within the first 10 seconds of trading. Stocks at 79. We'll get back to that. Vertiv, 18% on the day. Congratulations to everyone in Vertiv. Absolutely incredible. 235. That's up 18% on the day. Google at 320. That's green. Schwab recovering a little bit from yesterday's sell-off, even though that's still down 7%. Amazon, that goes green. AEHR, 24%. They said a hyperscaler is ordering a lot more from them. This is also small cap. It was less than $1 billion in the pre-market. That one's getting a lot of momentum. That's up 24% on the day. OSS, they got a new military prototype contract. That's up 3.15%. T-Mobile, that's down 3%. Shopify loses the pump. Wow. Shopify was freaking 143 back to 132. It was at 145. Honestly, I would say it's the SaaS sentiment. That's crazy, dude. 145 to 132, losing a majority of the pump on those earnings. S&P 697, baby. Look at that. Is NVIDIA pumping? Oh, NVIDIA 193. There you go. NVIDIA 193. That is pumping. Broadcom at 344. That's up 1%. Zeta, that's down 1%. UNH, that's down a little bit on the Humana earnings. Disney, that's down 0.5%. Reddit, that's at 150. Snapchat's down 2%. Verizon's down a little bit. Upwork's down another 4% after being down 20% yesterday. Oracle just went green. Very nice to see. Tessie, 430. We are back to 430 on Tesla. Robinhood, I know it's not back to 80, but the bottom's not falling out yet. And hopefully that doesn't happen. 78.50. If it kind of normalizes there, that's not the craziest thing to see. Maybe an 8% haircut is enough for the day, but that one still down. OSS breaking through $10. Micron, 8% up on the day. I'm not sure why Micron's moving. There had to be some type of memory headline to get Micron to move higher. They did get an upgrade yesterday to $500. Morgan Stanley also raised the upgrade today to $450 from $350. So I guess 2 upgrades in a row. That's helping Micron. SanDisk, that's up 8% on the day. Memory names getting some love. Bloom Energy, that's up another 6% on the day. T1 Energy, how about that? That's up 5% on the day. Tesla, 432, that's up another 2%. Fermi, this was a IPO for a data center company back in 2025. That's up 8%. It is down a lot from the IPO price, but that getting some momentum probably because of Vertiv and the blockbuster earnings that they had. S&P, nice move, dude. S&P was 671 last Thursday. It's not even a week later. We're at 696. I do not think that's a dead cat bounce, folks. I really don't. Doesn't feel like that's a dead cat bounce. Micron begins HBM4 shipments a quarter ahead of schedule. All right, that's our headline. That's our headline for Micron. And that's why Micron is green. There you go. Micron getting some love right there. Just below 400, but still up about 7% a day. Meta, are we getting a pump? Meta, 677. That's up 1%. Not too bad. Iren, are we past 45? We are at 43, so that one went red. Well, it's green, but slightly red from the pre-market. Rocket Lab had a good day yesterday. That one now goes red. Again, not red. Nope, now it actually is red. 71.90 basically was flat. NVIDIA still 192. You're seeing some red candles across the board within 4 minutes of the market open. So definitely a little bit of a head fake on some of these names. Robinhood now getting hit a little harder. Let's see if it can hold that 77 level. Uber's down. Lyft is down 14%. But the overall trend on a variety of other names continues to be green, including memory and energy. Bloom right there, 159. I mean, NVIDIA still holding the 190s, but it got hit right at 193.20. S&P got hit at 697. Let's see if it loses 696 or not. Again, market's choppy. It's hard to trust it in any direction, but the overall shift from last Thursday, like, I mean, the S&P would have to fall a good 3-4% now for us to get back to those levels. And I don't know if that's easily going to happen, given the type of surge we've seen over the past couple of days. Shopify loses everything. Wow. They are really giving it to Shopify here. That's crazy. Shopify loses everything. The stock was at 145, right back down to 126. I don't know if that's a Shopify reason or if, once again, that's a SaaS reason. And I feel like it's SaaS more than Shopify. Or what it could have been is a lot of people bought it at 110 in the past week, and they're dumping it in the pre-market, and they're taking their swing trade and they're moving on, which is not crazy to see. All right, Hood, full 10% down. Let's see if she breaks 76. Let's see if they actually give it below 76. It would not be crazy for it to touch 75. NVIDIA right back to 192. Tesla actually having one of the best days for the Max 7 right here. 435 as that's green. Where is SoFi? Grab earnings is at 7:30 tonight. SoFi 2085. The fintechs are getting sold off. PayPal also goes red. Affirm goes red by 2%. Coinbase goes red by 4%. Maybe Hood is taking down all the fintechs with it. Hood right here, 20 cents away from seeing below 76. I think with Hood, it's one of those things where you have to rip off the Band-Aid. If some institution is going to sell, then let them just sell and get it over with. And maybe this 10% decline is what we're seeing right now. Bitcoin is green, but hopefully that selling is enough. Wow, Shopify actually goes down about 2%. That is crazy. After those earnings, that stock getting hit. Yeah, absolute rug pull on Shopify. But can you blame Shopify? They put up like amazing. I mean, you could blame the market, but you can't blame Shopify. They did what they had to do. Like with Hood, you can blame Hood. They missed on revenue. It is what it is. Shopify, they beat, especially on free cash flow. They beat in a pretty decisive way. Once again, I guess it's this SaaS thing. Maybe there's something deeper in the earnings that the street's not liking, but I feel like that would have taken effect in the pre-market. Bloom, that's up 6. SanDisk, that's up 8. NVIDIA trying to hold on to 192. Robinhood, it's holding on to 76. It's not letting that get hit yet. 76.50 now. PayPal, that's down 2%. SoFi was at 21.80 yesterday, right back down to 20.70. Meta's at 6.73. How about Amazon? Amazon goes red. Spotify still green, almost $500. Whereas Palantir also goes red, 137. Microsoft was pumping yesterday. Microsoft is dumping today, 422 to 410. It's getting kind of ridiculous, but this is the nature of this market. Vertiv, that's up 22%. Like, again, part of the reason Vertiv's up is because Microsoft is spending so much on CapEx, not directly, but metaphorically. That is the reason why these derivative plays, like even in Amcor, is catching a bid. Like, you need that spend in the system. So for Microsoft to be down on that spend because they're going to grow, but for Vertiv to be up because they're getting the benefits of that spend in the short term, just feels like the market's rotating out of stuff they think is not going to be good in the next 6 months, which is fine, but it's creating some pretty attractive prices. I mean, Microsoft now trading at 22 times forward earnings. just because they're spending more on CapEx. Amazon 206, that's going to get TSM, which had an all-time high yesterday. That's continuing an all-time high. See, that's weird. They're selling off the hyperscalers, but TSM is getting bid up. 373, 1.94 trillion on TSM. Salesforce, wow. Yeah, I think Shopify is down because of the SaaS sell-off. Salesforce, this has to be a new low for the year, if I'm not wrong. Yep, new low for the year. Well, 185 was low. It's at 188, so very close. 188.49. Salesforce down another 2.5%. Adobe is down another 3%. Adobe absolutely just hit a 52-week low at 258.47. ServiceNow, are we below 100? ServiceNow still 4% down, but at least it's holding above 100. Intuit is down 2%. Once again, SaaS Armageddon on a random Wednesday after Shopify crushes is what we're seeing. The only green name is Cloudflare. They had a great earnings, so Cloudflare deserves it. CrowdStrike basically about to go red. Confluence about to go red, and then Snowflake is $1 away from going red. So really, Cloudflare is the only one that's holding up. Duolingo, that one is also red. Is that a new? That's very close to a 52-week low. 112.41. It's at 115. Zeta's probably getting hit because that. Tanner, I see you in the chat. Is the Shopify thing justified, or is this the market being the market? Because those earnings looked spectacular. 145 to 124. My goodness, dude. I mean, just think about how annoyed you must be of buying into strength in the pre-market, thinking those earnings were incredible, and then it doing a full 180 on you. And that's been the tone of this market for the past basically 2 weeks now. Palo Alto has earnings next week. Again, another SaaS name, even in cybersecurity, that stock's up 1%. Tanner says, IDK, what's happening? The quarter was amazing. I did get to ask Vlad a question yesterday, and apparently I said the word quarter in a weird way. I don't know why, but it ended like I don't know how to speak. Which I know I don't know how to speak, but still, that was weird. Palo Alto 167. Again, SaaS just getting sold off. AMD, at least that's green. Robinhood back to 77. So Robinhood not going below 76. Reddit's down 2. Disney's down 1. A-Lab, that had earnings yesterday. They crushed earnings. A-Lab, wow. Why is Astera down 16%? They absolutely demolished earnings yesterday. I didn't listen to the call, but the headline numbers were not bearish at all. Credo, which A-Lab is kind of in the same space in, also had great preliminary earnings. 16%. Credo is also down 4% after being up 20% 2 days ago. What's happening, bro? Astera beat EPS by 15%. EPS is up 57% year over year. Revenue's up 92% year over year. Maybe this is a valuation thing. I haven't really done a deep dive on the valuation, but growth is not being rewarded here. Growth is also not being rewarded for Shopify. Palantir getting hit. SoFi getting hit. HIMS was at 19. HIMS right back to 1691. All right, so you can basically get it at the same price you could get it at where it bottomed 2 days ago. Don't know if this will be a double bottom, but this was kind of the worst of it. Rocket Lab, oh boy, that stock got to 76 a couple days ago, right back to 70. Hit 61 last week. Hoodie, trying to make a little bit of a move back to 78. I think if we can end the day at 78, 79, I'd be happy. We can end the day just below 80, I'd be happy. We lose 75, then we're probably going to the low 70s. So hopefully we can hold above that. On Semiconductor, that's up 5%. They had a good earnings. Yes, AEHR, they had a big report they put out this morning on a hyperscaler ordering more of their product. That's up 35%. Shout out to Roy. He's been on this name for, I think, almost a year now. Again, it is a small cap, so this can move pretty quickly, right? It was like 800 million in the morning. Now it's $1 billion. So this stock right here, getting some momentum. And again, these smaller names, they're benefiting from all the CapEx. The bigger names that are spending the CapEx are not benefiting at all, at least in terms of stock price. And I guess that's just the market that we're in. TSM, though, trying to hit new all-time highs. Gold and silver also made a move this morning. I'm not sure what the macro reason for that was, but gold, that's up 1%, silver up 4%. They have not hit those Friday highs that they had last week or 2 weeks ago. But gold and silver did get some more momentum. We talked about TSM. Again, the January numbers yesterday were bullish. Adobe continues to fall down 2%. Microsoft below 408. See, that's frustrating because I'm sure people bought it yesterday at 415 to 420, thinking the trend was reversing. And that didn't happen. Grab earnings are at 7:30 p.m. tonight. 7:30 p.m. Eastern tonight for Grab. Oscar 14, that's up 9% at least. We looked at Vertiv. They crushed it. Again, congrats if you own that name. Data center demand is through the roof. And that's why Vertiv continues to catch a bid. Tesla at 435. Tesla's at least holding. The other Max 7 are struggling. Meta, though, little green. Nope, Meta flipped red, 668. Apple, a little bit of safety. NVIDIA, at least 192. And then Tessie, 435. Amcor, are we getting a move? Okay, Amcor, not bad. A little bit of a delayed reaction from earnings, 56 on Amcor. Couple days delayed. Amcor should be a beneficiary, just like a Vertiv, of all this CapEx spend. Doesn't have to make the same stock move, but it's a relatively small company compared to the Max 7. So it makes sense that that's getting some love. Vertiv almost touching 100 billion in market cap. Again, that one potentially could be in the S&P 500. Unity, 30% feels a bit overdone. Now, again, I'm not in the gaming space. I don't know how big the threat of AI is to gaming. Their earnings, they beat on the top and the bottom. I imagine they said something about AI, and they probably made a argument around how AI could be a headwind. Now, granted, they're probably trying to talk about how AI is a tailwind, but something the street's not liking here. Down 30%. Revenue was $503 million. Fourth quarter results once again comfortably exceeded the high end of our guidance, said the CEO. I don't see any AI headline here. They missed on the guide by $1 million. That's not enough to take it down 30%. They missed on the adjusted EBITDA guide by $2 million. That's not enough to take it down 30%. I don't know. Whether it's Unity, whether it's Schwab, whether it's ServiceNow, if there is an AI competitor, the market's just like, yeah, like we have to take your stock down. And I think it's getting a little ridiculous, but this is what we're seeing. IBKR, how's that one doing today? IBKR 77.48, that's slightly flat. Schwab again got hit yesterday. That's still below 100. And then Hoodie trying to hold on for 77. Ondas goes green. Okay, so some of the drone stocks holding up. 970. Is Iran getting smacked today because of crypto? I think crypto still affects some of the Bitcoin miners, but I would rather say it's more sentiment on data centers. I mean, same with Nebius, up 1%, but a lot of these names relatively flat compared to where they were 3 weeks ago. AMD at 219, so AMD is at least catching a little bit of a bid. Upstart actually had a good quarter. I agree. I don't know why this thing's down 14%. Upstart had a relatively decent quarter. So I'm not sure. I'm not sure why that's down. But a lot of these names, man. Amcor up 5%. They're just going to get Truist. The regionals are up today. JP Morgan's up today. Morgan Stanley's starting to recover a little bit. Snowflake, wow, down 2%. IGV down 2%. SBET down 2%. BMNR. ETH below 2,000 again. BMNR below 20 again. MicroStrategy 130. And then BTC 67. Very interesting price action across the board. Walmart at 128, that's green. So TSM and Walmart are going green today. Meta goes red. I don't think there's a headline on Tesla, but that's up. And obviously Robinhood getting hit by 10. CoreWeave's up a little bit. SPY, are we at 694? We're still up 0.5%. We got $3 to go before SPY goes red. I don't know if they let SPY go red, and considering a lot of the other sectors are still green outside of tech. Trump just tweeted, Justin, great job numbers, far greater than expected. The United States of America should be paying much less on its borrowing, aka bonds. We are again the strongest country in the world and should therefore be paying the lowest interest rate by far. This would be an interest cost savings of at least $1 trillion per year, balanced budget plus. Wow, the golden age of America is upon us. Okay. I mean, he's not wrong. The job numbers were pretty damn good. Like, I didn't expect 130,000 jobs compared to 65,000. But does that mean we're in the golden age? I don't know. Numbers are cooked. Dude, at this point, if we want our stocks to go up, I guess you just you don't say anything about the cooked numbers. I mean, look, I don't know if they're actually cooked or not. I'm sure there was tons of cooking during the Biden presidency. But if we want these stocks to have any chance of going up, I mean, maybe, just keep your mouth shut about the cooked numbers. What else can we do? What else can we freaking do? Now, look, at the end of the day, I think these numbers are more real than not, because when you break it down by sector, you're seeing the specific private sector in particular, 175,000, right? Versus like 70,000 expected. So, and it should be happening. I mean, like private companies, if they're, spending on all this CapEx, you got construction, you have logistics, you have vendors, distributors, you should have more activity with jobs going up. And so, I mean, look, maybe it's cooked. Maybe it is. I have no way to prove it, but logically, if there's all this 650 billion in 1 year, not in 2 years, not in 3 years, not in a decade, in 1 year, more than $500 billion being spent in the United States on CapEx, that should result in more jobs. Nebius right there going up 3%. And, maybe we're seeing the impact of that in January. But long-term, can that play out? I'm not sure. Bitcoin, that one's flat. We're going red now. Bitcoin below 67. It's simmered, not cooked. I mean, I remember when this was 2023 or 2024 when Biden was the president, and no one believed the JOLTS numbers. JOLTS were going up like 500,000 every month. And everyone was like, where are all these jobs coming from? Like, there's no way we have these many jobs open. So, I mean, you're right to be skeptical if you think the job numbers aren't real, because for the past couple of years, people have been wondering about the jobs data. Now, we did get some revisions as well. So 2025 payroll growth was slashed from 584 to 181,000. This, I don't think the market cares that much about that, because that was expected. We were supposed to get a pretty bad revision. But in 2025, in December, we thought we added 585,000 jobs. We ended up adding 181,000. So it was slashed by about 300,000. Average monthly gain for 2025 was just 15,000 jobs. And part of the reason why jobs dropped heavily in January from the Challenger report was because of the part-time layoffs that happened. However, I think a lot of the revision was priced in. I mean, the market knew that we were going to revise. So maybe in 2027, we revise the jobs we added in January of 2026. I mean, maybe that's how it ends up playing out, because it seems like every month we have a revision. But I guess we'll worry about that in 2027. IBKR, that goes red. Schwab goes down 0.5%. BMNR, 1984. Rocket Lab, 71.21. Micron still holding that 7% move on the headline, which is good. How can Trump say this is the golden age? We still have a lot of issues in the economy. I think I agree with you, and he's going to have to pump this golden age narrative if he wants to win the midterms. Especially this whole affordability thing, and people having jobs is a helpful element of creating affordability. I don't know, dude. I mean, we're 2 months in. We got 7 more months until the midterms. I wonder how much the American people are going to buy into the narrative that we are in the golden age. Or is there going to be a bigger issue around affordability going into the midterms? But I think for the next 7 months, that is the number one thing Trump's going to focus on, is how do I convince the American people the country is becoming more affordable? And if he doesn't, then we're going to see what happens in the midterms. Palantir 137. Spotify, that's down 2. Spotify had a 5% pump. Now that lost it. Wow, ALEB down 20 freaking percent, dude. 20 freaking percent. My goodness. I don't think this deserves to happen for ALEB. It's the golden age for investors. Yeah, I mean, look, the past 2 years have obviously been good for equities. Now, here's the thing. If it ends up becoming a not golden age for investors and a not golden age for Main Street, I think the midterms are going to be tough, dude. I mean, if people go to vote with their 401ks down 20% in November, and you've got job growth that is anemic, it's just going to be a little tougher to justify that the economy is doing great. But earnings are good. CapEx is strong. The Fed's going to be cutting rates. I think you put all those three together, you still end up with a relatively strong bear market or bull market. And, it could turn bearish if the consumer credit gets bad, if the unemployment ramps up, if we don't get any rate cuts. I mean, there's plenty of ways it could turn bearish. It's just, I don't think you fade the CapEx story that easily. Bloom Energy, that just lost the entire pump, dude. These stocks are like for traders. Like they give you a opportunity to buy into the strength. And then if you can sell the top, you can then short it on the way down. I mean, these 10 to 15% reversals, it must be amazing for people trading. But if you're trying to actually hold these names, it's just emotionally up or down. Bank of America, that goes red. JP Morgan, that's also slightly green. Unity, again, down 33%. My goodness. Also, yeah, we do have a lot of tax refunds coming up. That's also true, which should be good for the broad economy. We also have a lot of, dude, I'm going to have to by the end of March, I'm going to have to sell some stocks to pay my taxes too. So all of us have to get ready for that. And that could also have a little bit of an impact in the short term as well. But definitely I don't think maybe some people started selling now to pay for their taxes in 2 months, but I think most people tend to do it closer to April 15th. So that is another general headwind. But maybe it will be offset by some of the broader earnings growth. T-Mobile, they raised their multi-year outlook, targeting 19 million broadband customers. Again, Verizon had a really good earnings last week. Verizon up 2% today. Wow. Verizon trying to push 50. Verizon has outperformed most tech stocks this year. T-Mobile now almost green on the day as well. Why doesn't Robinhood give tax info up until February 17th? I don't know if it's a Robinhood thing, but from my understanding, most brokerages take until mid-February to give you your tax documents. But you can request it. Like I requested my P&L from them like a month ago. So you can go into support and request it early. But the actual official document that you send to your accountant, that happens by mid-February. Verizon's still green. That's up. Do you hold Ondas? No, I do not hold Ondas, but that one also took a pretty ugly haircut from 15 to 9, got down to the low 8s. Yeah, Fix, that stock has been amazing. Comfort Systems, 1347. Oh yeah, that's true, because you can wash sale up until, yeah, that's a fair point, Hollis. You can wash sale up until 1:30. Yeah, that makes sense. That actually, I never knew that. That actually makes a lot of sense. Yeah, so they kind of have to wait until mid-February to account for those wash sales. Microsoft, that's still down. Hoodie, we're losing 76. All right, here you go. This is your low of the day, 75. Let's see if we actually end up losing 75. Crypto getting hit, which is what's hurting Hood right here. Bitcoin 66.5 as that continues to go down on the day. Amazon 205. Bitcoin still down. There's no real news. I don't see any headlines. Robin is just getting hit more with Bitcoin outside of the actual earnings. S&P up. S&P. All right. So we definitely lost 696. We're at 694. Still have a couple bucks before we go red. but we are down 0.5 to 0.3. Shop down 5% is kind of crazy, dude. That is, again, this is one of those cycles for earnings where you can put up amazing numbers and the street will just say, we don't care. So if you miss, like Hood missed, the street's definitely not gonna reward you. It's kind of worrying me for NVIDIA. I'm not gonna lie. It really is worrying me for NVIDIA. Because I think NVIDIA is going to crush it. I can't see a world in which NVIDIA doesn't crush it. But like, what if the street just doesn't care? What if gross margins are down by like 1% or something and the street gets pissed off? Like, I guess we do have this headline. Trump is considering exiting the U.S.-Mexico-Canada agreement, USMCA, a deal he negotiated per Axios. That headline did come out a couple hours ago, though, so I don't think that's really immediately affecting the market right now. Although you are getting some bigger red candles. Yeah, that's old news, right? NVIDIA's been down since last earnings. Yeah, and look, honestly, if NVIDIA was at 170 going into the print, I'd be way more relaxed. NVIDIA at 190, this is the price it keeps getting rejected at. It's basically been flat for the past 6 months. And so for them to break above 200, which they did one time in October off of a Jensen guide for 500 billion, which they're going to beat by a lot. Like, what does he say that gets this thing back above 200? And remember, last time they crushed earnings, they went from 183 to 197. And then you guys remember that Thursday in November, and then dumped 500 billion in market cap, went right back to 170 that same day. And that's what started the November 5% pullback. If that happens again, I mean, that would just be incredible. But I don't think there would be an earnings reason for why that happens. Wow, Shopify loses 120. That's down 6. Robinhood, she looks like she's going to lose 75 right here, down 11% on Hoodie. As that one gets a haircut as well. Sorry, it's me. I've been holding NVIDIA for 6 months. See, it's no one's fault, dude. It's just this market, like, they don't believe in this AI tailwind. They don't believe in the AI CapEx, but then they're ready to take down Schwab because a company comes out with AI tax planners. Like, it is the most ridiculous thing that I think we've seen in at least a couple of years. AI is not real, so sell off the AI stocks, but AI is so real, sell off everything else because it's going to be hurt by AI. Like, it doesn't make sense. It does, and you can't say, oh, it's Meta's valuation or it's NVIDIA's valuation, unless you just don't believe the AI build out is real, because then you would believe those growth rates would stop, which is fair. But the market has obviously indicated they believe that this cycle is going. Otherwise, why would Vertiv be up 25% today? If AI was fake, Vertiv, okay, they have one good quarter or whatever, but that's not a reason the forward-looking market gives Vertiv a 25%. No, you think that these data centers are going to keep being built. Someone has to pay for them, and those companies are the biggest companies in the world that are getting hit. Which is why it really doesn't make sense. Bitcoin, low of the day, 66.5. If every time a new AI software service or product is launched, then this happens, it's going to be a long year. I agree. I mean, the fact that Schwab took a hit yesterday because of an AI tax planning product inside of some company, Schwab down another 1%. It's going to be a very long year if this is the route, or this is the way the algos are programmed to treat the market. Robinhood, very close to losing 75. It's going to happen right here, 75.03. We are going to see 74 pretty soon. There it is, 74.97. On Hoodie, down 12%. QXO is up 11%. Do they have earnings today? Steve will probably be happy about this one. I don't think they had earnings. Acquisition. QXO buys a company for $2.5 billion. Kodiak. QXO acquiring Kodiak for $2.25 billion. That's why that stock's up. NVIDIA loses 191. Ondas, it was green, now it's red. Even Micron losing a decent chunk of the pump. SoFi, goodness, dude, 2054. They're taking fintech down. Bloom just went 2% red. SanDisk still up 9, but that was at 605. Uber's down 2. Lyft is down 15. Shop down 7. Is this dead cat bounce? I think we've got to lose 687 on the S&P for this to feel more dead cat-ish. If we hold 690 throughout the week, no, I wouldn't think so. Remember, for us to get back to those Thursday lows, I mean, we got to see a lot more pain across the market. At least another 2% down the S&P. Maybe, but I don't know. I mean, Broadcom was at 295 last Thursday. You know, like, these names got to get hit pretty hard from here to get back there. ARM 127, that's holding on. And then Caterpillar up another 3%. CBO sees large, historically unusual deficits in the coming decade. CBO 2025 Republican tax cut law to add $4.7 trillion to U.S. deficit over 10 years, reduce immigration to add $500 billion. Okay, so the Congressional Budget Office, maybe that's the reason some of these stocks are getting hit. They are estimating a basically $5 trillion deficit. CBO also says higher revenue from Trump's tariffs to reduce deficits by $3 trillion over 10 years. Forecast U.S. real GDP growth at 2.2% in 2026 versus 1.9% in 2024, averaging 1.8% for the next 10 years. Okay, so then the actual deficit would be 1.7 trillion if the tariffs can reduce it by 3 trillion. If we add 4.7. I believe that's what the CBO is saying right here. The problem with these decade-long outlooks is, like, no one knows, right? Like, if a Democrat gets elected in 2028, everything could change. I mean, there's so many different policies. I mean, the tariffs could go down. The tariffs might be ruled illegal by the Supreme Court next week. Like, so a lot of these projections don't easily forecast to reality years prior. TSM still moving 377. As that is still green. Yeah, we're going to have Technical Thursday this week. Jason will be on Thursday, and we'll talk about markets. Today, we have a bunch of earnings. Jason, he could, I mean, he can't do Wednesdays, but if he could do Wednesdays, he would have been on today, but he'll be on tomorrow. Today, AppLovin is the main one after the bell, which, by the way, AppLovin, wow, down another 5%. Dude, the Shopify thing is crazy. 8% down. I mean, this is just not a market that's rewarding anything. Unless I'm missing something and Shopify actually said some stuff that was really bad. Let's actually go to the president right here, Harley Finkelstein. Let's see what he has to say.
Buyback program. Joining us this morning exclusively is Shopify president Harley Finkelstein. Harley, welcome back. Good to have you.
Good to be here, Carl. Always love jumping on here right after I get off the earnings call.
Yeah. It's been an interesting sort of wrestling match where you're obviously growing GMV at 31, but these overriding fears about displacement of AI, I wonder, is that a hard thing to slip through?
Well, let me share what I shared on the call this morning, which I think is will give you the best picture, which is 2025 with Shopify at full throttle. We drove compounding growth and we laid the rails for this new AI commerce era. We're building this generational business, Carl, and I think the 2025 results do the talking for us. GMV was up 29% to $378 billion. Revenue was up 30% to $11.5 billion. That's like a decade of growth over 20%. And we now power more than 14% of the entire US e-commerce market. And we're growing even faster globally. And we did that with discipline, with free cash flow exceeding $2 billion. In 2025, though, we built the infrastructure for the future. I think Shopify really built the rails for AI shopping, which will run on the Universal Commerce Protocol that we co-developed with Google, which means that every brand will soon be able to sell on every major AI platform with agentic storefronts. And I think it's clear that this AI shopping is a new frontier for commerce, which is good for merchants, but it's very good for Shopify.
Right. And remind me here, AI-driven searches are up, what, 15x?
Almost 15x. Now, again, it is on a smaller base for sure, but we're already seeing that so many merchants on Shopify and off Shopify are coming to us to ask us how they can participate in this. And part of the reason that we've done so much around laying these rails, we co-developed the Universal Commerce Protocol with Google. This is an open standard for any AI agent to connect with any brand. It's the protocol that covers the full commerce journey. We also built agentic storefronts so our merchants can instantly turn on AI shopping. And what it does do is it syndicates billions of products through our entire catalog to every major AI platform: Google AI Mode, Gemini, ChatGPT, Microsoft Copilot. And some of our brands like Mono, they're already doing it as well. We also built the agentic plan for brands that are not even on Shopify yet. And we think that when commerce flows freely across agents, everyone wins. So we're really setting the standard here for how the world will shop with AI, and Shopify is at the center of it.
I wonder what this means in terms of vastly lowering the barriers to entry and what it takes to create a new storefront, to attempt to create a new brand. It would just seem to be able to proliferate so freely. And what does that mean for your existing customers? Are they playing defense? Is it going to be harder to get noticed?
Yeah, actually, if you kind of think about commerce having a sound barrier, it sort of feels like 2026 is the year we break that sound barrier down faster, less drag. And we actually think you're going to see that happen. If you think about a new entrepreneur, now they get uncapped reach. AI shopping gets them in front of more consumers on sort of this merit-based shopping type of model. Also, uncapped resources. If you think about something like Shopify Sidekick, where incredible.
So whatever Harley's saying, it just doesn't matter. It just doesn't matter. This market does not care. Shopify down 9%. S&P is very close to losing this red. Robinhood down 13%. Amazon down at 205. Nvidia 190. You are now seeing the red candles come in more aggressively. Bitcoin also not helping out right here. 65 loses 66. Not the best thing to see. And then Nvidia, if we lose 190 there, then yeah, we're probably going red. 190.50 on Nvidia. Tesla lost everything as well. Wow, 435 to 426. Yep, there you go. Rocket Lab 69 loses 70. Credo as well. Credo and A-Lab just getting nuked right here. Credo 10% down. This thing was up 30% 2 days ago. And A-Lab getting hit. Netflix, did you lose 80? Oh, we didn't even talk about the net. By the way, A-Lab down 20%. So someone has taken an activist position in Warner Brothers, $200 million stake, and they're going to try to use that stake to now combat the Netflix merger. The Wall Street Journal reported that yesterday. And the name of the firm is Ancora. Ancora takes a $200 million stake in Warner Brothers, and they want Paramount to get the deal. And they're an $11 billion fund. They have a history of activist investing. And they are going to try to get Netflix to not get this deal. Which, again, is just, it's a headwind for Netflix to deal with this. Because the deal should be done by now. Palantir loses 135. Coinbase 7% down. Did SPY go red? SPY goes red. 697 to 691. All right, so now we got to hold 690. We lose 690, it gets a lot uglier from there. AMD 212. Fed president, further Fed rate cuts could allow higher inflation to persist for longer. Yeah, Beth Hammack also came out yesterday and said we don't need another rate cut. The Fed speak has been relatively hawkish the past couple of days. We're not getting that rate cut anytime soon. It's just not happening. Now, the jobs data today could have been potentially something that would allow us to get the rate cut sooner, but Reddit down 5%. Jobs data was good. So maybe stocks are reacting to not get a rate cut. Or maybe it was two really good days this week, Monday and Tuesday, and today we have to suffer for the 2 good days that we had. maybe that's how it works. Intel goes green, up 2. Could we go back to last week? I mean, we got to see a little bit more pain than this to go back to last week. It's very possible, but we still need some more pain. Shopify, though. Shopify is basically back to last week. 10%. What was the low last week? 107. Okay, so it's not actually there yet, but man, it was at 145 this morning. Now it's at 115. I mean, it loses another 2%. They're going back down to last week's lows. Robinhood trying to hold on to 74. Did not break that yet. Nebius just lost everything. Nebius was at 95. Monday and Tuesday were flat. Yeah, but Monday and Tuesday kept the gains from Friday. And Friday we had a 2% move on the S&P. So like, that's kind of why we were saying, right, if we can at least hold on this week and stabilize, that would be bullish. But it looks like today, if we lose 690 on the S&P, then it's probably going to be more bearish than not. IGV just went down 3.5. Yeah, I think we're down because these Fed presidents are saying we can't cut rates. I don't see any other headline besides that. It is looking like these Fed presidents are saying we're not cutting rates anytime soon. Snowflake down 4. Morgan Stanley 177. All of these continue to get hit. When all stocks go down after reporting good earnings cycles, shows you cycles are in control. We are at the tail end of a 20-year cycle, plus it's a midterm year. Yeah, I mean, look, that's fair. When stocks go down after putting up good earnings, it's definitely not the most bullish, 100%. And the fact that it's a midterm year as well is also not helping that narrative. I think the broader question is that it's not all stocks going down after good earnings. Like Vertiv, for example, which had a great earnings. That stock's up 19%. Now, then you have other companies like a Shopify that has great earnings. That's down 9%. But again, Shopify is in the SaaS space. That's part of the reason I think it's getting hit. Vertiv is in the data center space. So I wonder if the trend going into Q1 2026, because it's still Q4, ARM had a great earnings. That stock went from 100 to 130. Again, that's in the semiconductor data center space. Even Meta had a great earnings. I mean, it gave it up after, but it also did make a move on earnings. So I guess, towards the end of Q1, which is May, we'll have a lot more data on if stocks really can't move on good earnings. Because if that's the case, then yeah, it's a midterm year, and whatever we want to do, these stocks are not going to go higher. Like in 2022, you could do whatever you wanted. The market was not taking those stocks up. And if we see signs of that in the coming months, I think NVIDIA is going to be the biggest sign. If NVIDIA puts up the best numbers you can imagine and the market doesn't take it higher, this might just be one of those moments where the market is not going to let these names move higher and they consolidate. And again, the market's trying to figure out what to do with interest rates. The bigger concern, forget the stock market, forget earnings. These bond yields are absolutely insane. I mean, the Trump even tweeted about it this morning that we should have lower borrowing costs. If those yields don't come down, I think that's a bigger issue for why it's harder for the market to be on this side for stocks. But then again, rates are coming down with Kevin Warsh. Then again, earnings are still going to be very strong. Hopefully that continues throughout the rest of the year. Q4 has been amazing. So I don't want to dismiss the entire year just because on Q4 earnings, stocks are not reacting positively. And I think part of the reason stocks are not acting positively either is this whole SaaS narrative, which just became a massive headwind for about $1 trillion worth of the stock market. Like all these names that are getting hit because of Anthropic's AI assistant. Like it's kind of crazy, but I think that's also just created this like weird headwind that every stock now has to be concerned about. A-Lab still down 20%. Crypto still dumping as well. Yeah, I think it's it's really quick to again, say this is a bear market with the S&P very close to all-time highs. You can't look at that jobs data and say this is a bear market. I do think by May, after Q1 earnings, if we see the same reaction after stocks put up amazing numbers, which is that the market's just not taking them higher, Microsoft about to go under 400, then you could start to say, all right, this is not the year for stocks after 3 really good years. But 1 red day after 3 green days is, I don't know if that's the easiest argument to make. SanDisk and Micron still holding on. Now, Bitcoin, I think we can all agree, is definitely in a crypto winter. That's for sure. And I don't know if 60K was the bottom on BTC. The economy can be good, but the stock market can be trash. They aren't intertwined. Yeah, that's very fair. A lot of you guys are talking about these Halo stocks that Josh Brown mentioned. Yeah, let me pull this up because this was a good segment from their stream yesterday. Let's pull this up right here. And, the whole point of this was these are the segments. These are the ultimately working this year. Let's pull this up right here. So the argument is Halo, and the term for that is heavy asset. Let's just pull this up right here. I can't buy Halo stocks at all time high. Yeah, I mean, that is the critique for that. Let's pull this up. Okay. This is what they were talking about yesterday.
Which is a backronym for heavy assets, low obsolescence. Just at first blush, does that pass your sniff test? Does that seem to be an accurate reflection of the stocks that are going up versus the stocks that aren't in 26?
Oh, I'm sniffing it. It passes mustard of the Dijon variety, and it passes muster. Back to you.
Yeah. All right. So what we're talking about here, guys, the stocks that are not disruptable, at least not currently, by AI. I think I actually have discovered the first new factor of the post-AI era, although I am not personally equipped to figure out how to quantify it.
That's
Maybe
that's a Kai Wu thing.
Kai Wu should be all over this. But so here's what's interesting. You keep hearing people talk about rotation, and you keep hearing people talk about broadening, but those are anachronistic terms that do not fully capture and reflect what's actually happening here, because Halo stocks are not necessarily value, and they're not necessarily growth. They could be either, or they could be both. It's not about that dichotomy this time around. It's not a value to growth to value. We're not talking about that. They're not even native to any particular sector. Although we do have a lot of Halo stocks in energy, materials, and consumer staples. Halo stocks obey a very simple litmus test, and you can do this as a rhetorical exercise out loud. Ask yourself the following whenever somebody puts a ticker in front of you, if you somewhat know the fundamentals. Can an LLM replicate what this company makes or sells, or can it not? And you're going to have to be a little bit creative because things are being disrupted out of nowhere. But generally speaking, we spent 15 years celebrating these asset-light businesses, software being a really obvious example, information services, consulting, a lot of the white-collar services part of the economy. Asset-light, that's what everybody wanted. High-margin businesses, and they didn't really have like big, heavy things on their balance sheets.
Can I just interject for 1 second?
Yeah.
These asset-light businesses, not to be like super doomy, but these are companies that when the equity goes to zero, the bonds go to zero.
Yes. And hopefully it doesn't come to that. But that's the test. So if the answer is yes, that's not a stock that's going to work right now, unfortunately. If the answer is no, then, my friends, you have a Halo stock on your hands. So I'm hearing people say rotation. They're saying broadening. They're missing it. I want to quote from Mike Wilson, who is a strategist at Morgan Stanley, on the broadening. And he says, the broadening accelerates. Despite choppiness across large cap indices last week, our broadening thesis continued to play out with the S&P equal weight index breaking out to all-time highs on Friday. Again, this is something that you and I have been talking about for months now. In particular, we were encouraged by significant outperformance from early cycle reflation trades, transports, housing, regional banks, small cap.
So, I mean, a lot of those themes, I mean, essentially what he's talking about, quite frankly, is value stocks versus growth stocks. I mean, I know that's a massive oversimplification of what he's saying, but he's talking about like Verizon's not necessarily going to get disrupted by LLMs and AI. Maybe there's a world in which somehow the market says, oh, Verizon's dead because of AI. But realistically, everyone needs cell phone service, right? And broadband is not going anywhere. If anything, AI should be a massive tailwind. So that's why Verizon, 3% day, as it's making a pretty big move right here. And the market's selling off Shopify, I guess, to go into Verizon. Now, granted, will Verizon outperform NVIDIA by the end of the year? That is the question. That was the question last year. Obviously, we knew which one ended up playing out. Will the Halo stocks, S&P loses 690 right here, be the stocks that outperform this year? Maybe. Do you think we need a little bit more data before making that argument? But you are seeing that in the numbers with, or not in the numbers, but in the stock price performance of a lot of these names. Shopify now down 10.8. AppLovin down 7. Microsoft down 3. The irony, Microsoft owns Halo. That's a good point. That is a very good point. Could Uber be disrupted by AI? Well, look, I think Uber is compounding at a phenomenal rate. The problem is, the narrative is FSD or self-driving in general kills Uber, which, again, I don't think it kills Uber. I don't even think in the short term it's a headwind. Maybe in the long term, if like things really get to scale. But that narrative, like Uber has been, and Bill Ackman has a lot of Uber. There's like 4 or 5 billion of this stock. So you got some big super investors that feel the numbers are absolutely detached from reality, or the stock price is detached from reality. But the narrative on it has not been pretty. Intel goes red. Vertiv still holding on to 18% is incredible. Vertiv not letting go of a decent chunk of the pump today. Broadcom goes red. ARM goes red. Snap is below $5 a share. Tanner says, I literally can't fathom the shop sell-off. It was an amazing print. Yeah, this is weird, dude. This is very weird. Down 10. Even Harley, he was, as much as he was trying to explain the business, nothing he said the street cares about here. Apple is your safe haven today, as that's up. I mean, dude, this is Shopify's revenue chart. Like, if the market wants growth, Shopify's giving you some pretty damn good growth. 31% year over year. It's very weird. VIX spiking. VIX. Yeah, okay. Set about 18 on the VIX. No, 18.9 on the VIX. That's up 6% now on the VIX. So that's also coincided with the S&P. Losing 690. Vlad will be on in about 5 minutes on CNBC. So we'll see what he says. Also, I do like that one of the questions they answered was, why is the stock down 40%? I'm actually really happy they chose to answer that question because, like, it's an elephant in the room. The stock's down 40%. And, a lot of people probably would have not wanted to answer that, but Vlad just gave a response. And he said, look, we can only control what we do in the company. The markets are the markets, but the inputs that we're putting in are growing on every metric. And ultimately, the market's going to have to decide what happens. S&P 689. Yeah, Morgan Stanley raised the price target on Micron. Shopify down 20% within the last hour. Apollo interview was good. Yeah, let me go to the Apollo guy who was talking about software. And then we should have Vlad on soon as well. Centrus is down 21%. I actually didn't look at their numbers. Wow. Okay, I'll try to get those numbers. Centrus is a nuclear play. That means Oklo must be down then. Centrus down 20. Oklo's down 7. All right, so the nuclear name's also getting hit.
It was because it was such a large percentage of the market. and we felt like, listen, this environment, we're in a violent technology cycle. It's the early days of a very violent technology cycle that is going to change the value paradigm for software investing. And there's going to be several winners that take a lot of it, but there's also going to be some losers.
Yeah.
And we have to be super humble right now around what's actually happening. We have to be super thoughtful about, okay, are we really know what the world's going to look like in a year or 2 years? I don't know about you, but the last 3 days,
I don't know what a clock come up with today.
Sector after sector is getting disrupted. And
well, that said, though, how do you, at this point, given you have to make these decisions every day, how are you viewing the potential winners versus the losers?
I mean, it's starting to show up in pricing now, right? You see it with Salesforce, you see it with Workday. The discount rate that the market is putting on this is already applying the uncertainty. These stocks are down 50, 70%. So there's lots to do, and new financings are taking into account that uncertainty in price and financing. And so you can do it now. What we're more concerned about is that area of time between 2018 and 2022, where none of those risk factors were on the page. And, revenues right now in all of the business, you look at every software business, they're still doing relatively well.
They're fine, right?
But, that's like saying when the iPhone 1 came out, that BlackBerry was still going to be fine. iPhone 1 came out in 2007. BlackBerry sales peaked in 2011.
Yeah, no, it's all about terminal values, which seem to be coming down potentially for some dramatically. But I guess, do you then shut the valve off in terms of capital flowing to that industry? Does it reduce your opportunity set?
I think it's going to increase it because there's going to be more volatility. I think it's the early days of a lot more volatility. I feel like there's several businesses that have proprietary data, that have proprietary infrastructure that you actually can invest in. The focus has been really around the private credit firms. I'd say many of us in the private credit business who grew up in the business we were like, well, you're so focused on credit, you should also be focused on equity. We're senior and first in the capital structure. We get no benefit for being senior in the capital structure. And we're lending to some software businesses. If you look at our software exposure, which is the lowest in the industry, some of that software exposure to Databricks, to Stripe. We feel like we're financing, we just financed, XAI, SpaceX chips. We feel like we're financing the next $1 trillion companies in the US. We think there's going to be half a dozen new $1 trillion companies. The next great American companies we feel like we're financing, and that's getting caught in this. And it's also the markets aren't taking into account that we're first in line behind lots of equity in our
Understood,
business.
although that equity does seem to be getting eroded at a relatively fast pace.
For sure.
Do you need to restructure any of this stuff?
Listen, there'll be a handful of names that are super commoditized. And the guys in software that'll call me, my friends will call me and say, John, that had nothing to do with AI. That was just a bad business that was bought in 2021.
Right.
And there's a handful of those that commoditized, no moat around their business, paid wrong price. You're going to see a series of restructurings in software. But by and large, software will be used more. The key question is, what are people going to pay for software? The marginal cost of production for software effectively is going near zero.
Right. All right. So when Robert Smith, who runs Vista, of course, says that, and this is a quote from a story today, we believe AI will enhance software, not replace it. You say what?
I say definitely, but you better have a proprietary data set, you better have a moat, and you better have the mental flexibility and agility in the management teams to move really quickly.
Yeah.
If they don't, and they say business as usual, it's highly likely that things are going to move. I mean, the pace of change is accelerating, not decelerating.
What about all those go privates that took place in that timeline you just outlined? Let's call it 18 to 22, done at fairly high numbers that are sitting on and in the portfolios of, and I don't mean to pick names here, but Vista or Thoma Bravo or so many others.
Yeah. Listen,
what do those look like, those deals?
Yeah, those sponsors are the single best investors of software in the world, right? They led most of the deals. They know software better than anybody else. There's a handful of names in there that, ultimately in any technology cycle will be disrupted. And the game is going to be which ones of those assets, the scalable assets, can they use AI to their benefit, cut their cost curve, increase, but you're going to have to change the model. You're not going to make 80 to 90% margins anymore. You may make 40, 50% incremental margin. And there'll be some really big winners that actually take most. And there's going to be some losers in there. It's not all going to be just the business as usual.
And there's got to be a high risk to your business on a daily basis almost, isn't there? Or am I wrong
Yeah, we
in
have
assuming that you just don't know what the next tool is going to be?
AI is it's going after every profit pool in the world.
And by the way, we're talking software, but you guys lend to all sorts of businesses, and it's not inconceivable. It's coming for them.
So you got even Apollo making the argument that AI is going to be a detriment theoretically towards the free cash flows and the premium multiples that these companies have been enjoying over the past decade. S&P reclaimed 690, so we got a nice bounce off 689 for the short term. They're being honest about that. But you can tell based on how the guy was talking, he's also having some humility and saying, we don't really know what's going to happen. And, you know, the way we're underwriting a lot of these investments is that some of the stuff absolutely will get disrupted, but some of the stuff is not really going to change as easily as people think it's going to change. So it's kind of I think the key word he used there was it's going to be a volatile time. Like if Anthropic tomorrow literally did come out with a replacement for Salesforce, even in the most minute sense, but they were like, hey, we are now pitching to enterprises this AI agentic customer relationship management tool, I think Salesforce will be down 10% the next day. Just off the headline, even if Anthropic didn't have the ability to meaningfully generate revenue from it yet. But in the next 2 years, if Salesforce keeps compounding and Anthropic's CRM replacement doesn't do anything, then maybe Salesforce once again catches a bid. But that narrative, it seems like even Apollo is recognizing is the broader factor here. Jason will be on Thursday. Jason will be on Thursday for Technical Tuesday because we couldn't do it yesterday. Mattel also got hit. Now, Mattel had nothing to do with AI. They're down 25%. They got hit because they missed estimates. This company sells toys, for those that don't know. So December, they missed estimates. And that's why they got hit as well. My haircut is not the reason the market is dumping, okay? Because all of you guys said in December to shave the beard. All of you. And you said the long beard was the reason the market was dumping. So you can't have it both ways. You can't say it's because I got a haircut. You just can't say that. Can't be the reason. Old bell, no new hair. Dude, we're going to have to go through every superstition this year. If this is how the year turns out, we're going to have to go through every superstition to freaking get this market to pump at this point. Vlad's on CNBC. Let's go to him. And let's see what he has to say.
Yet the stock has been so tied to sentiment around Bitcoin in particular. How do you plan on sort of managing through that? If it is a long-term bear market, how are you positioned there? And then just fighting the market perception that Robinhood really is right now lumped in with crypto.
I think perception lags reality to some degree. We now have 11 businesses that are generating 100 million or more in annual revenue, and that's up dramatically in just the past couple of years. So we're going to continue to diversify. We're also, in the long run, very bullish on the crypto industry and have relatively quickly become a leader there. Just after the earnings call last night, we announced the launch of Robinhood Chain Testnet, which is our layer 2 chain, the best chain for trading of real world assets. And so what I talked about at the earnings call is really forward looking. What's our vision for 2026? How are we going to execute? Crypto is a big part of it, but it's really about driving forward tokenization and making sure that crypto technology blends with assets that have real fundamental utility, like tokenized stocks and other things.
When you talked about moving it forward, there's been so much focus on prediction.
By the way, on the topic of Robinhood, someone just tweeted that their settings on Robinhood now allows them to turn off event contracts. Their settings on Robinhood now allows them to turn off event contracts. I don't know if this is rolled out to everybody. If maybe if you update your app, you'll see it. But based on the screenshot I'm looking at, you can now turn off event contracts. So for everyone complaining about that, it looks like Robinhood is just going to let you turn it off.
Markets too. That has just been major focus for Wall Street. You talked about it, some of the growth there, even in this current quarter. Given that the NFL season is over, where do you see the growth there? Does that maybe put a kind of a damper on volumes? And what is sort of the next leg of prediction markets, if not sports?
I think the interesting thing about prediction markets is it's more than just sports. So a lot of people have been saying, well, you know, if you look at the sports books, typically after the Super Bowl activity goes down. But what we saw is the week after the NFL season ended, there was a lot of interest in the government shutdown contract. And that contract actually got more volume than many individual sporting events. And so as we continue to diversify and as we put these contracts contextually where customers expect to see them, like in stock detail pages, where if you're looking at, you know, Tesla or Apple or other stocks, you see relevant prediction markets. I think that you'll see the percentage of non-sports increasing over time.
We heard some estimates from analysts, you know, 8% of revenue, 9% of revenue for Robinhood. So obviously a growth area. How are you thinking about the risk here? There's been talk about potential market manipulation. If there's event contracts on everything, including what you're going to say on an earnings call, how do you think about the guardrails and the potential risk for insider trading?
Yeah, it's something we spend a lot of time thinking about. And I think that obviously we have experience monitoring and surveilling this with our traditional business because insider trading is not a new concern. It's been real in equities markets for decades, if not more. And I think there's this is an even stronger argument to making sure that this industry is onshore in the US, because if you're offshore, unregulated, and using products that don't actually verify identities, all bets are off. So I think that's why it's important for us as a regulated player. We KYC all of our customers. We know who's trading, and that gives us the ability to really ensure market integrity.
Let's talk about AI for a second. We just saw what's happened. It was the wealth management firms, some of the incumbents and your competitors. We saw it with legal. We've just seen it with software and all of the AI disruption, sort of this knee-jerk sell-off reaction. What do you make of that when you look at the brokerage industry and the threat there? And then where is Robinhood sort of positioned in that shift? Are there things that do worry you when you look at AI and the potential disruptive nature and the impact on Robinhood?
I think that the impact on Robinhood is going to be positive. And, you know, stepping back, AI is definitely going to have a significant impact on the financial services industry. You see new models and new capabilities coming out every day. I mean, just this past week, we had Opus 4.6, we had Codex 5.3 from OpenAI, and these are step change improvements in coding. And now you're at the point where these models can work autonomously for hours in the background and give you back like a sophisticated piece of software. So I think what you're seeing right now is it's clear that this is going to be a big transformation, and that the companies who are technology companies who can actually adopt this technology are going to leave the incumbents in the dust.
We're not seeing as a big of a tailwind, I would think, to some of these businesses yet on earnings. I know you discussed that on the call. We have to wrap up in a second here. I want to ask you, while I have you, about IPO sentiment. So many of the AI labs and SpaceX have talked about potentially going public this year. We've reported on it. What are you seeing from retail investors? Any signals of early demand as we may get trillions of dollars in issuance this year?
I think the demand for AI names has continued to be high, even throughout the ebbs and flows of the market in the past year. And we have an IPO access product. And what we tend to see is when there's a lot of IPOs that are interesting to retail, the net deposits actually start coming in because people want to bring in new money to get exposure to these IPOs. So if it's a big IPO year and there's some names that have already publicly said that they are making preparations, I think that's a great tailwind to our business and to the equity markets in general.
Quick last question, billionaire tax, if that gets passed, are you leaving California?
Well, my intent is not to leave California. I don't agree with it. So I think that it's important for California to be the center of startups and founders. If you think about this tax, really a founder's tax. There's not a lot of like old legacy dynasty money in California. It's people that have come, a lot of them with nothing, and built businesses that California benefits from. You're already seeing people leaving the state. So
Now, yeah.
I think there's a big question mark about whether this thing just sort of like completely backfires, and we don't want to end up as a state in a situation where we're killing the golden goose, right? We want to get the eggs in perpetuity. So
that's right. It's a good analogy, and you obviously built Robinhood here as well. Unfortunately, we're out of time, Vlad. It's so good to see you. Thanks so much for being here, and guys.
That's basically Vlad saying, I don't want to leave, but if you guys take my billions that I worked so hard to achieve coming from Bulgaria as an immigrant, I'm out of here. I think that's basically what he was trying to say. But look, in general, yeah, I mean, Vlad is basically making the argument that we shouldn't be that tied to crypto. Prediction markets are an emerging asset class that we're going to lean into, and there's plenty of growth vectors for the business. I mean, that's what I got from that interview. And again, a lot of you guys are confirming in the chat, in your Robinhood settings, they are allowing you to turn off prediction markets. So for everyone that cared so much about the sanctity of the American youth because they were becoming degenerate gamblers, you now have a solution to everything you were so concerned about. I would just hope that that same level of moral outrage would also be applied to a myriad of other companies that are probably doing things worse than prediction markets. And I'm not expecting to see that type of moral outrage because, you know, it's not really convenient for people to be morally outraged about their iPhone being made by people who get paid 10 cents an hour in China. But for all the people that complained about prediction markets, okay, now you have an answer. Won't someone please think of the children? Again, I don't even mean to go on that rant, but I think it's phenomenal to see the hypocrisy in moral outrage that people have. I mean, to build those phones, to build those electric vehicles, a lot of dirty shit has to happen. NVIDIA's supply chains in Foxconn are not clean. Let me tell you that. There's a lot of shit that happens for Jensen to put up those earnings. But it's like, but everyone wants to complain about prediction markets. I'm just like, and I get it. I'm not trying to dismiss the concern that people have around gambling culture. That's fine. And you're allowed to make those criticisms. But to, at the same time, not even think of making similar criticisms to a lot of other companies that do things that I would say are a lot worse than prediction markets, or maybe just as bad. It just, like, to me, I was like, okay, so do you just hate Robinhood then? Like, you really just hate Robinhood? Because why aren't you making those same arguments about everything else? Two wrongs don't make a right. That's 100%. But I'm not trying to seem like the moral figure of our times by trying to proclaim how horrible prediction markets are. A lot of people are. And it's like, hold on, buddy. This is the thing you want to go after? Out of all the issues on the planet, out of all the, and if we're talking about the stock market, right? Out of all the issues with public companies that do unethical things, prediction markets is where you want to go on rants. I mean, the amount of posts I saw yesterday of people just complaining about it, so upset, like this is the worst thing in the world. It's like, dude, there's a lot of other things going on. I don't know. It's just one thing that I've been very clear about for the past couple of years is I hate hypocrisy. Especially, and maybe it's just because I've grown older, right? Like, I hate moral hypocrisy. I hate being able to say, well, this is what I believe in. It's so valuable, so important. And then at the same time, do something that goes the opposite direction. So, I don't know, for your Amazon packages to get there in 2 days or less, a lot of shit has to happen. That's not really the most ethical if you had to actually break it down. But no one has a problem with Amazon. Everyone has a problem with prediction markets. For everyone to, well, Palantir works with ICE. It's like Palantir has a 10-year, $1.95 billion contract with something called AWS. If you hate what they're doing with ICE, guess what? That software is running on a cloud computing stack from Amazon. How do you not hate Amazon, but you hate Palantir? Because without AWS, Palantir can't even run any of the software. Like, when you really go down and try to logically break down people's moral concerns, it becomes incredibly selective. It's like, okay, you could have those selective concerns, but to be upset at one thing over not the other is just weird to me. Doesn't make a ton of sense. I hate Amazon too. My point is, you can't, like, it's hard to be an investor at that point. And prediction markets are growing, man. This is a brand new industry. Do we hate IBKR? IBKR gives everyone's like, oh, IBKR is so much better than Hood. They were first to offer prediction markets before Hood. In fact, Hood was using IBKR's platform to offer prediction markets. But like, no one has an issue with I've seen zero concern about IBKR and prediction markets, probably because people just hate Vlad. Like that's what I'm taking away from this. People just don't like Robinhood. They don't like the brand. That's fine. You're allowed to not like it. But to scapegoat it with they're promoting gambling, it's like, dude, a lot of these companies, Schwab has 0 DTEs as well, which to me is basically a gamble. Which, by the way, I was trying to sell an NVIDIA 195 call for Wednesday. I ended up buying it. I saw it this morning. I was like, why is this down 90%? I was like, oh, I bought it. Look at this shit. This is why you don't buy 3-day options. Look at this. 95% down. I was like, why am I down 95% on a... I was like, did NVIDIA like collapse? It's like, no. I bought a call instead of sold it. So that's gambling as well, basically. People not wanting to invest in gambling is a valid reason. No, that's fine. That's people not wanting to invest in gambling is totally fine. I'm just intellectually curious why people wanting to invest in a whole lot of other things that are just as worse, if not worse than gambling, brings up zero moral outrage. But gambling is the thing that gets everybody upset. And not everybody, but the select people that are so vocal about it. I don't know. And again, you're allowed to be vocal about anything you want. It's just to have zero concern about anything else, but so much concern about gambling. It's like, okay, that's fine. SaaS names trying to recover here. Snowflake, that's down 4.6%, up from 173. SPY, are we getting a move? SPY 690. Okay, so we got a bounce off 689. We're holding 690. We're not losing 690 yet. Palantir is still down 4. That's up from 132. Robinhood, 75.35. At least that bounced from 74. And then Bitcoin kind of stabilizing at 66.1. Gambling is a choice, so it's not even that bad. Look, I agree with people saying gambling is bad for society. I'm not disagreeing with that. Like, the evidence is really clear that gambling is not a good thing. But there's also a lot of nuance to people making their own choices. There's also a lot of nuance to, at the end of the day, this is a product and a tool that if people want to use, they can use. If they don't want to use it, like, you can't blame the company for offering it simply because other people want to use it. And if it doesn't work and it doesn't succeed as a product, then the business is not going to work, and eventually Robinhood pivots. But if it's working and people want to use it for however they want to use it, then they're going to use it. Options trading is gambling as well. I would tend to agree. That NVIDIA 195 call I bought expiring today was basically a gamble, even though I did it by accident. And if that's allowed, I don't know why betting on the Seahawks isn't allowed either. AppLovin, this one. Does anyone own AppLovin? What do we think happens after the bell? This one fell to 370, bounced off 438. I think they're going to crush. I think they might end up having the same fate as Shopify. The same exact fate as Shopify. Shopify right here slowed down 11. Julian says people think the stock market is not gambling. I don't want to go down that argument because people get really passionate about that, because there is plenty of ways to make the argument that the stock market is absolutely gambling. But obviously there is somewhat of an intrinsic difference of if you buy stock and it goes down, there's cash flows, there's earnings, it can come back up, whereas gambling, you lose all your money. I get it. But yeah, there's definitely ways that people approach the stock market as a gamble. I think that's why Vlad is so stoic about this as well. Vlad's like, dude, I don't care. It's like, if people want to trade, they're going to trade, whether it's 0 DTEs, prediction markets, whatever. We're going to give them the tools and we're going to grow the business. And again, my simple point is there's so much moral outrage about this, and like there's very little moral outrage about other things. And then you begs the question, why? Maybe it's because people just hate Robinhood. which feels like the biggest issue. Margin is also gambling. Yeah, that's a good point. A lot of people got margin called last week. Is margin the most unethical thing in the world? Like, dude, SoFi literally last year was giving you a rebate to take out margin. They were giving you a rebate to take out margin. I remember arguing with some of the SoFi bulls about this. I'm like, guys, I like SoFi, but how is this not incentivizing gambling? They are literally saying we're going to give you money back if you borrow our money because they know they're going to make more on the spread. And people are like, oh, that's different. It's like, how is that different? You're borrowing money that you're going to put in the market, which one could argue is the biggest casino in the world. And then if it goes down, you have to pay it back by selling other assets, which definitely is not getting your money right. Zero moral outrage, zero moral concern. But let's get mad at Robinhood. I don't think it's logically consistent. Chad says for clicks. Well, it's definitely for clicks because the amount of people that were tweeting about Hood last night saying it's the worst company in the world. I'm just like, okay. People are using this now to get attention. SanDisk still up 8%. Qs just went green, folks. Qs went green. Qs go green. NVIDIA holding on. VIX down a little bit, which is nice. Tesla's still red, but it's about to flip green. 10-year, I think, is still at 4.2, which is not helping. I don't think we have any other macro data today. Again, oh no, 10-year is actually 4.17. Came down, which is good. 10-year down, and Macron just said something. Macron says U.S. tariffs on Europe economy are a coercion mechanism, calls U.S. tariffs a game changer, a structural turning point. Europe must preserve key sectors, including chemicals. Okay. Macron fighting back against some of these Trump proposed tariffs. Europe should invest in mining critical materials and build strategic reserves. He sounds like Trump now. I mean, that's exactly what Trump said a couple days. Wow, CRML down 2%. Dude, these rare earth stocks, they had a crazy bid 2 weeks ago. A lot of them down 50%. MP down 3.3. USAR, that's down another 5% today. ASTS, that's holding on. 3%. Rocket Lab trying to go green, bouncing off 67, still below 70. And then Amcor also having a great day at 55.82, up 4%. Has an app already been punished due to SaaS sentiment? Dude, I thought Shopify also already got punished due to SaaS sentiment. And Shopify is down 11. So I don't think you could. I don't know, dude. Like if Shopify, they took her down 30% on the swing, who's to say they don't do that with AppLovin? But yes, to answer your question, absolutely it's been punished from the SaaS carnage. Also, the short came out yesterday and said he messed up on the entire report, and this stock still is down. So it's like the biggest short that caused the sell-off a week and a half ago says they completely messed up their analysis, aka they covered. And your stock is still down going into earnings, even if they have a good print. I don't know what pumps this thing. I'm heavy into AppLovin. Wish me luck. Well, what's your average? Hopefully your average is you have some margin of safety. But I mean, there's a lot of people buying this thing on the 550 dip, which is not a crazy dip given where it bounced off in November. But see, that's the thing about the software name. Like, okay, AppLovin goes from 650 to 550. You think, okay, cool, that's the November dip. Maybe it goes a little bit lower. Then it goes to 520. You're like, all right, touched that in November for a little bit, but bounced to 550. Then from 550 got back to 700. This thing went to 370. Any dip buy, and it's not just AppLovin, it's a lot of these names. SPY just turned green, by the way. Any dip buy has not been rewarded in SaaS. I mean, even on Palantir. Like the only dip buy that got rewarded was 125. I guess below 130, you could say, which it was at last Thursday. But the 160 to 140 dip on earnings, I mean, now we're below 140. Microsoft, like 480 to 404. The only time you got rewarded is if you bought at 395, which it was at on Monday. So I guess that's the issue. Is it hypocritical for you to Webull instead of Robinhood for your streams? Not really, because again, I've told Robinhood why. This is why when people say I'm biased and everyone's like, oh, you're glazing. I'm like, dude, I literally don't even use their product when I stream every morning and afternoon. Like if I really was like a Robinhood fanboy, I would use their product no matter what, and I would just deal with a crappy experience just for the sake of loving Robinhood. I mean, like I literally use their competitor. And Vlad knows I does. He's probably annoyed that I do it. I mean, I know that he's annoyed that I use Webull. But like, I told him what to change. They haven't freaking changed it. So what am I going to do? Like literally yesterday, I pulled up Legend just because it was a Robinhood stream. And obviously I wanted to use Legend during their earnings. But I had to have Webull on the side just so I could see the correct earnings move. Because Legend didn't even show you the correct earnings move. So it's laughable when people say I'm a fanboy, I'm biased. It's like, no, I think I'm making a very logical argument around selective moral outrage. You might not agree with my argument, but I think it's something to think about, that everyone wants to get mad about prediction markets, but not mad about anything else. And then I use their competitor every day. How is that being biased? You literally have a hoodie on, you're biased. That's true. This hoodie was probably made in Bangladesh for like $10, and I don't know how much I paid, maybe $50 for it. But I'm not out here protesting Nike. It's like, no, like I'm living my life, and all of you are as well. And you're not going to protest Nike, like, because that's the nature of capitalism. And you're not going to feel morally upset every morning that you paid 4x for what something costs and someone got paid horrible wages in Bangladesh to make your hoodie. You're just not going to feel upset about it. So that's my point. It's like, if you're not going to feel upset about that, then to be so upset about other things, I don't know, it's confusing. Chat says, and someday you will build in Palantir. I should probably do that. Speaking of hoodies, Iliano just sent me the Valentine's Day Ontology hoodie, which I'll be rocking tomorrow. It's a pretty damn good hoodie. It's pretty damn good. It's like super thick. It's like, I think you guys will enjoy it. It's like a maroon hoodie. It's okay to be upset about some things. It's not all or nothing. 100% agreed. I'm just saying, when it comes to the stock market, for the type of outrage people have about gambling and zero outrage about anything else, that like the only thing I can believe then is people hate Robinhood. Maybe there are some people that genuinely hate gambling so much, but then when you break, again, let's use logic. Why is margin not gambling? Why is zero DTEs not gambling? Oh, it is. Oh, well, every other broker offers that. Oh, well, I don't hate those brokers. Like, why? It was like, because I hate Robinhood. It's like, okay, well, that's what I thought. You hate Hood. You don't hate Schwab for offering zero DTEs. And that's where it breaks down. I'm not saying you have to have an immoral opinion. I don't have a moral opinion on everything. I'm just saying, if that's the one topic you want to hone in on, when you break down the argument logically, that there is no argument at that point. Like, it just does not make a ton of sense. Ondas still down 5%. The drone stocks cannot catch a bid today. They tried. Red Cat as well, down 4.83%. Citi sees Fed rate cuts beginning in May versus March. Okay, so that's weird because you had Bank of America come out and say maybe we'll get one rate cut in September. Citi sees it happening in May. So they're definitely delaying their expectation, but they also think their expectation is much better than what Bank of America thinks. Do you have Shop? I do not have Shop. Honestly, I felt bad in the morning because I wanted to buy Shop, and then I see it up 10%. I'm like, man, I should have bought it. Now the street's just like, well, here's your opportunity again. 145 to 112. 145 to 112. VIX is make or break here. Yeah, I agree. Are we back at 17? NVIDIA also getting a little bit of a move right now. VIX is, VIX just went red for the day. I mean, this is where, I agree. This is break or make. We either go higher on the S&P here and the VIX goes lower, or the opposite? S&P 692 back to being green. QXO at an acquisition, that's up 12%. Tesla almost going green. Netflix just struggling to hold above 80. Amazon 205. And Walmart 127. What do you think of Fortinet? They had a good earnings. Once again, they're a SaaS name inside of cybersecurity. And dude, okay, here's the question. Let's put in the chat. Are you like, or let's do a poll on this as well. Are you officially calling BS on the SaaS sell-off? Because I feel like, and you know, we got the data yesterday that retail is starting to buy SaaS pretty heavily via. I feel like you either are or you aren't. And if you are, then it's on sale. If you believe in the narrative that SaaS is dead, then you can't touch you can't even touch Microsoft. Like you can't touch Apple Oven, you can't touch Shopify. I'm still undecided. Like my gut tells me yes, BS, but I don't know if that means you just buy IGV. I think you got to be a little selective. Now, granted, when they all pump, they're all probably going to pump together. So IGV is not horrible as a way to get exposure, but like I would much rather own Shopify than Salesforce is my point. And Salesforce down another 5% today, dude. Dude, it must suck to have joined Salesforce last year as an employee and have a lot of your comp be stock. Because man, like unless the company turns things around with growth or the SaaS narrative fades away, that stock is just not, it's not moving. And Salesforce already put out their guide for 10% over the next couple of years. So unless they beat that, I don't know if they're growing that higher. Hey, Unk, is Hood a good buy currently right now? Am I an Unk now with this haircut? If I officially turn into an Unk who rants about gambling, is that what this haircut has done? Dude, this haircut is crazy. I've never had, I think it's been 15 years since I've had this short hair. Like, it's kind of crazy, bro. And it is going to grow out. So I don't know if I want it to grow out and be super large again. But I guess I'm an look. I think Hood is going to be okay, but the reason it might not be a good buy right here is because of Bitcoin. Unfortunately, if Bitcoin continues to get hit, Hood will get hit. Having said that, they're trading at close to a 33 times PE. If you believe they're going to grow more than that this year, which I think they will for a variety of, I mean, just listen to the earnings call. Listen to the earnings call. You either have trust that they're going to execute. If you don't buy the stock. If you do, I mean, it's down from 120. Same thing with Shopify, right? Like you're either going to take the dip or not yet. The reason I haven't bought Shopify is because I haven't really gone through the numbers. But if I was going to buy, it would be here, right? Hood got to 68, it's at 75. Okay, it's a couple bucks higher. Shopify got to 107, it's at 111, it's a couple bucks higher. Like if you're going to buy the dip on these, you got to at least dip your toe. That's what I did with Microsoft. Now ended up dipping my toes at 413. It's at 403. That's what happens when you dip your toes. You know, you might not be right all the time, but I think the only specific thing of Hood is that because it's tied to crypto, if Bitcoin really goes through it, then 75 is not going to be a great buy. Bitcoin stabilizes here. I think the earnings alone definitely warrant that it's okay for the stock to be at these levels as a buy. I know a lot of people are calling for 60 or 50. I mean, maybe I think it's possible. Obviously, if we definitely get into a more bearish market, it could happen. But I do think a lot of the selling has been enough at this point. Yeah, the 52-week high is 153. I don't think we're getting back to that anytime soon. See, here's the thing. I mean, let's say we end the year out at like 100 on Hood or 105. It would still be down for the year, which is crazy, right? So it's one of those years for Hood. It's one of those years for Hood. It might be the same for Tesla. It might be the same for Palantir. It might be the same for NVIDIA. I know we're only a month and a half into the year, but it might be one of those years where our favorite names that were really undervalued in 22, 23, even in 24 to an extent, and enjoyed multiple expansion in 25, they have to deal with multiple compression in 26, and they're still up. If you zoom out a lot, Robinhood was $6 2 years ago. Rocket Lab was $4 2 years ago, but it might not be making those types of new all-time highs that we want it to make. And again, we looked at the S&P 500 chart yesterday, the number of companies that are leading. It's tons of companies that have nothing to do with tech. And at the end of the day, a lot of these growth tech names that we're into, maybe this is just not the year for them at the moment. I still think we need Q1 data for that to fully play out. Why don't you invest in private companies like Anthropic? I don't know. I feel like Amazon's enough exposure. Also, the problem with investing in private markets, dude, is you don't have access to any of that money. Like, I would really love to have access to whatever money I have in the private markets in my actual brokerage right now. But like, you just can't. So if I were to put more money into Anthropic, which you wouldn't even know anything about the financials, not that you just have to trust some type of SPV. I'd rather buy Amazon. Amazon's going to recognize like $100 billion gain when Anthropic goes public, or not 100. It's like a $60 billion gain on their balance sheet when Anthropic goes public. And if Anthropic, doubles when they go public, which a lot of people are expecting, they're going to get to that 600 billion market cap. That'll be 120 billion for Amazon. And you get all of Amazon without having to stick your money into something that maybe doubles when it goes public. But if you're betting just for a double and all that money's gone, it's not worth it. Yeah, it's illiquid, essentially. There's plenty of ways to get exposure to some of these private names in the public markets without having to deal with being stuck in the private markets. Less fees, more transparency, all that stuff, yeah. SKM is 20% Anthropic. SKM Telecom. Chris Camillo likes this. I have not heard of this one. I know Camillo is just super bullish Amazon, and Anthropic's part of his thesis on that, but he loves that. Why aren't Amazon and Microsoft up? Well, again, it goes down to CapEx. Microsoft missed on cloud by 2%, but Amazon's spending $40 billion more on CapEx. The theme this year has been, if you're a big tech company that's spending a lot of money, the street is not going to give you the benefit of the doubt until they see the ROI from that money. And even if they see the ROI, the street is rotating. And I think that just means if that's the trend for this entire year, which I doubt, but let's say that's the trend for the next 300 days, that's got to be a golden buying opportunity for retail that gets to load up on Microsoft and Amazon. Amazon, its lowest EV to EBITDA ratio in history. Microsoft below 25 times next year's earnings. And you get the fruits of those investments in the future, even if it's not short term, which is how investing works. It's just, a lot of us are accustomed to seeing the gains immediately. And that might not be happening on some of these names. Iran, are we getting a move? Iran, little move, still down 1% on the day. Jason will be on Thursday. It's not going to be on today. Do you think energy is good this year? Yes, but again, a lot of these names, they've already, like Bloom has already run up a lot. Bloom now down 2% on the day. It's still up 60% for the year. But it has been one of the most volatile energy names that is also put up. I mean, they had an amazing earnings on Thursday, like an incredible earnings. And so I think they deserve to get their year-to-date returns. I just don't know if, is this going to be up 120% this year after being up 60%? So it's either that or you go through XLE, right? You go through the utility. Look at XLE. That's up 2.3% today. It's just Chevron, Exxon, et cetera. Oil prices are up today by about 2%. That's probably why XLE is pumping. It could have also been why pre-markets were red with XLE. Yeah, well, okay. I didn't check. The LEU missed on EPS, right? Centrus, why are they down 8? This is a really good energy name. Stock Talk has had this one for a while. I think his average is like $90 on this. He's loved this one from a nuclear perspective. Again, I'll be live with him at 12:45 today. On X. And we'll do a review of the past couple of weeks, but also bring back Equity Edge for 2026. LEU full year revenue, $448 million. Again, they got that NNSA contract last week. Flat guidance for 26. and then miss on EPS. That'll do it. Will says, my sister and best friend work at Salesforce. They're getting screwed. Yeah, dude. The tech RSU comp is literally, talk about gambling. It's a freaking gamble. Like if you joined Palantir 3 months ago and got your shares at 180, it's a lot different if you joined 3 years ago and got them at 7. But like, you might have just graduated college a couple months ago and you got lucky enough to get an acceptance into Palantir. But now your stock's down $60 a share. Like, what are you going to do? I mean, this stuff is just not easy when you're talking about a broad-based sell-off in one sector. Shopify still down 12. App 11 down 5. Is anyone buying PayPal? Even Steve's getting kind of interested in PayPal. I just think PayPal's narrative is a little ugly. This new CEO's got a lot to prove. Last CEO cannot get it done. Like, I'd rather buy Hood here than PayPal. Does anyone disagree? Like, did Hood mess up earnings that bad that we're ready to buy PayPal over Hood? Like, I understand valuation-wise, I get it. But I really, like, if my life depended on it, I'm picking Hood over PayPal. Zeta's getting hit because of the SaaS sell-off as well, guys. I mean, there's no reason for this stock. There's no, like, I have not seen a headline. If anyone has, then let me know. But I have not seen a single headline that justifies this going down from 20 to 16. And if Shopify can't get a move off their earnings, like, that's what scares me about Zeta. It's what scares me about all the SaaS. It's what scares me about NVIDIA. If you put up the best numbers in the world and the street says we don't care, then a lot of these names just get hit. Hood can sink further. PayPal has no bottom left. Does PayPal have no bottom left? This thing was below 40 last week. I mean, I agree with you. I think PayPal shouldn't have a bottom left. But I said that at 60. I remember saying on this stream, I didn't buy PayPal, but I was like, guys, I think PayPal's kind of bought. And then they put up those dumpster fire of an earnings. Literally ousted the CEO. And it's like, okay, well, yeah, it's going below 60. So I don't know if that could still happen to it. Would you buy A-Lab? So I don't know as much about the networking space as other people. This will be a good stock to get Jason's opinion on. Trades at a PE of 123, price to sales of 30. On the first glance, that feels expensive. Now, again, I really don't know enough about this business, so there's probably something deeper here. Same reason why Credo got the bid. But I'm not sure why they're tanking as much as they're tanking today. A-Lab now year to date is 15% down. It was at 187 on February 9th. Could Palantir go lower? Yeah. Again, the thing about Palantir is again, it trades at still a very expensive multiple. I think the selling is a bit overdone at this point. Same thing with Hood, but same thing with Tesla. Tesla was at freaking 498 a month ago. It's at 420. But could it go low? Of course. Like, Tesla doesn't really trade on any fundamentals. Now, Palantir has really good fundamentals. They're growing, but it's going to have to stay appropriately valued for the fundamentals they're putting up. We literally saw this go to 125 last week. But again, I will say, if these names bottom, or if these names go lower, I think it's a market going lower with it, because they're just too ingrained in the stock market for them independently to go lower. Like Tesla, I don't think Tesla is going to go to 350 without the S&P going down with it, unless something really bad happens in Tesla. But when Tesla went below 400 last week, the market bottomed with it, at least in the short term. 13F should be out on Monday, is what I heard. We didn't get any this week.
I mean, we got one guy. I don't know who this guy is, but Harry Byrne from Soundshore. He manages $4 billion. I was looking at this a little bit last night. Added some to Google, added to Disney, added to Berkshire. He bought Salesforce. I don't know what price he bought it at, but given it was last quarter, he's definitely bag holding that right now. He bought QXO. Steve will be happy about that. 4 million shares. He bought BP. So this is not like a super well-known investor, but kind of your basic trimming across the portfolio, adding to some tech. And then he bought Salesforce, bought QXO, and then bought BP. But we should get most of these like next week. I'm assuming that's when we get most of the data. Oh, we got David Einhorn. Speaking of super investors, let's see what he has to say about the markets.
That AI is going to be a really, really big thing. Like the internet, if you went back to 1999 and said, how big is the internet going to be? It's probably turned out to be bigger than the biggest bulls. And yet, for the stockholders back then, things didn't work out for a while. It took a long time for that to grow through. And I think if you think about AI, 30 years from now, this is probably going to be have enormous impacts on society, probably in ways that none of us can even fathom right now. But then when you compare that to the opportunity in the stocks, it's a little bit more confusing to me. These companies are spending hundreds and hundreds of billions of dollars. And I don't think they're sitting around saying, if I spend another $100 billion, I'm going to get another $20 billion of profit. So I'm going to have a great result. I think it's more like, if I don't do this, somebody else is going to do it. So I'm forced to compete and I don't want to miss out. And I'd rather lose a couple $100 billion than let my competitor have this market. So I think it's going to be a very competitive market. And it's just very unclear to me where the returns are going to come. So we're just mostly focusing on other areas.
And it sounds like you don't think the math adds up for some of the spending.
Well, it depends on what happens, right? I mean, if you have these large language models, they're probably going to be commoditized. Like there's a lot of them, and it's very, very hard to see how you're going to get an actual return. But the hope that the people who are sponsoring, which is above my pay grade to figure out, is for artificial general intelligence, which will take everything to a completely different level where the computers are solving things and they're smarter than all of the people and can do all kinds of things that we can't even imagine. If somebody gets that and nobody else does, that's probably a really great opportunity for that company. The problem is they don't really know if they're going to succeed. And if they don't know they're going to succeed, I certainly can't figure out if they're going to succeed.
But I would think, I don't know, I think as a deep value guy, maybe you're looking at some of the carnage, for instance, in the software space, wondering if any of that has been overdone or if there are opportunities.
Yeah, we don't really know. A lot of these software companies were trading at 40 or 50 times earnings, and now they're trading at 20 or 25 times earnings. It's still too much for us.
Still too much for you. Overall market, too much for you. You said in your last letter that you haven't seen a market this expensive since.
Yeah, well, I think this is the most expensive market we've been in. I think that most investors aren't paying any attention to valuation. Maybe they care about the next data point. Maybe they have a view about price. But nobody has a real view about value. I think a lot of the people who professionally invest money and used to think about value have been fired, been redeemed. They've been turned into index funds or replaced by like pod shops, which they don't know what anything is worth, but they know what the next piece of news is going to be, and they kind of want to invest ahead of that. And so like the valuation discipline that the market used to have, it's kind of gone. Like those people have been fired, and I don't really think they're coming back. And so we have a market that is kind of disconnected from sort of traditional valuation measures. When you look at it like market cap to compare to the economy size or compared to profits and stuff like that, these are just at record levels, which doesn't mean you have to be bearish or you should sell all of your stocks. It just means that from my perspective, from a long-term point of view, this probably isn't the greatest time to have a ton of equity exposure.
I mean, the push.
Now, again, Einhorn has been saying this for the past couple of years. For those that don't know, he's not like Brad Gerstner, right? He's not going to paint you some magical story about NVIDIA and get all excited about that. He is not necessarily just a value investor, but he's absolutely way more value than growth. He has invested in growth stocks before, but he's not going to say the S&P trading at 25 times is cheap or that it's justified. The broader question is, do you agree with that? And if you agree with that, then yeah, it's one of the most expensive markets we've been in. Real returns can be nominal. If you think the earnings multiples expand and it's justified, then the market probably goes higher from here. But it depends on if you come on the value or growth side.
pushback on that, which I know you hear about all the time, is that the economic setup is pretty good. Fed policy has been easy. They've been cutting rates, and they might cut further this year. You know, margins are high and could go higher because of all these productivity gains with AI. I mean, those are all the reasons why we're looking at higher multiples.
And I wouldn't argue at any of that. And all of that may be true, and all of those things could come to be. In fact, I actually think the Fed is going to cut rates a lot more than what's priced
this
into
year?
the market. Oh, yes.
How many times?
A whole bunch of times.
A whole bunch of times?
A whole bunch
Market's
of
like
times.
maybe
the market's
two.
pricing into it's going to. I think it's going to be a lot more. You know, President Trump believes that the U.S. should have the lowest interest rate in the world because he thinks we're the best credit, and he's been mad at the Fed chair since he took office, screaming at him to lower rates. So he's picked his new guy. And his new guy is going to come in and he's going to lower the rates.
He has to convince the rest of the committee to.
I know that's the story on Wall Street, right? Which is, oh, there's 12 people, they have to be convinced. The thing is, has the Fed chair ever been a dissenting vote in his own decision? Like, I don't think that's ever happened before. And I think that Kevin Warsh, who I've met and I think is very articulate, he's going to come up with arguments that are going to persuade people. He's going to say, if the economy is running hot, like say the jobs report this morning, that's not a reason not to cut. The only thing that's going to make
market's telling us it's a reason not to cut.
Yeah, I think the market's wrong today. I think one of the best trades out there right now is betting on more cuts this year than expected.
Which you did last year successfully too.
Yeah, we've had this on for a bit, but I really think that you know, he's not being brought on to hold the rates at a steady rate. If we have 4 or 5% inflation, sure, then he won't be able to persuade people. But otherwise, he's going to argue productivity. He's going to argue we don't have to cut just because the economy is running hot. I mean, we can't cut even if the economy is running hot. And so I think by the time we get to the end of the year, it's going to be substantially more than 2 cuts.
Substantially more than 2 cuts.
Yes.
So that would be good for the equity market, wouldn't
It very well could be.
But you're not betting on the equity market.
Well, the way I'm playing it is by betting on more cuts. So I own a lot of SOFR
interest rate futures.
Yes.
You've also owned a lot of gold, which has been a very successful trade. I mean, do you have as much conviction in gold right now at 5,100 an ounce as you have previously?
Well, gold's been very interesting. It's gone up a lot over the last couple of years, and not for a reason that I would have foreseen when we started investing in gold, 15 years ago or something like that. What's happened right now is the Chinese have decided that they want to sort of compete on a currency basis. The central banks around the world are buying gold. Gold is becoming the reserve asset as opposed to treasuries, or it's kind of almost even at this point, whereas a few years ago it was mostly treasuries. I think that U.S. trade policy is very unstable, and it's causing other countries to say, we want to settle our trade in something other than U.S. dollars. And so I think that is what has been driving the cause for gold. Our thesis on gold over the longer term has been that our fiscal policy and our monetary policies don't make any sense. We're running almost a 5-6% deficit to GDP here with nearly full employment. On a cyclical basis, that's some kind of a record or very near a record, and certainly isn't sustainable. And if you look at the other major developed currencies in the world, they're as bad or worse than the United States. I mean, Japan is well over a couple 100% deficit to GDP, and they've gotten away with it a long time by paying themselves no interest, but now they have to pay themselves some interest. And so I think there are some issues that sometime over the next number of years could play out with some of the major currencies. And that's the core reason to own gold. And I don't even think that is at all the explanation for why gold has been going up now.
Although
I think that hasn't even played.
I mean, it was weak last year. It started this year weak.
It's been moderately weak, but you don't have like a panic in the dollar. You'd see like the bond market yielding much different higher rates on distant than it is right now, or you'd see the tips market pricing in long-term inflation at much higher levels than it is. I think right now the market still has a lot of confidence in the dollar and the treasuries and the long-term inflation outlook.
So Einhorn kind of giving you the opposite argument around why gold is going up. He's not agreeing that the dollar weakening or losing credibility is the single biggest reason for why gold is going higher. He's kind of pointing to the central banks as a larger reason. This is his portfolio, by the way, from last quarter. It's not been updated. I need to learn how to say that word. But Yeah, it's a relatively strong value portfolio. There's not a lot of growth in this one. Was he the guy who bought Peloton? There was someone, am I confusing him? Someone bought Peloton last year. No, it was David Einhorn. Okay, so he sold out of it, but yeah, he did buy Peloton. So he'll make those moves back and forth. But the majority, oh no, he still has it. He added 37% to it. Yeah, that's what I'm saying. Like, I mean, he had GoPro. A lot of these names don't necessarily only scream value unless you think they're like deep value. But he doesn't have NVIDIA. He doesn't have Microsoft. He doesn't have Amazon. He's not betting deeply on those types of companies, which is why he's saying it's an expensive market. And look, I'm not disagreeing with that. The S&P trades at 26, 27 times earnings. That's expensive. Relative historical multiple on the S&P is 18 to 20 times. But it's been expensive for the past year and a half. Hood getting a little recovery off 74 to 76. The entire market actually getting some more green candles because of the growth we've seen in earnings. And once again, no matter what you want to say about this market, you cannot deny that the growth is real. And the growth continues to be very real, which is why people, I guess, are willing to pay a higher premium. Are you still in Grab? Yes, I'm still in Grab. I'll be live at 7:30 tonight for those earnings. We'll have the market close as normal, but we won't have Grab until later tonight. Look, I'm expecting a good quarter, but which I still need to learn how to say that damn word. But at this point, if Hood's going to get smacked, if Shopify is going to get smacked, like I just don't know what to expect. I would think Grab has been hit hard enough. Maybe the street feels different. So we're going to need a good guide, and then we'll go from there. This was yesterday. I don't know why this word is giving me troubles.
Yes. Hello, sir. How you doing?
Okay. Congrats on a great quarter. Thanks for taking my...
Bro, why did I say it like that? Why did I like...
Yes. Hello, sir. How you doing?
Okay. Congrats on a great quarter. Thanks for taking my...
Like, it's just... It's not like I'm trying to be from the South quarter, but it's not even like a Southern accent. It's just like a dumbass accent. Like, I just sound like a dumbass. Congrats on a great quarter. Like, what am I saying? Zeta down 7. Hood still down 11. A British wannabe. No, that's the North. Did I sound Canadian? Congrats on a great quarter. Sounds like I was trying to say water with quarter. You were nervous in front of your crush? Dude, they didn't put my face up there. I should have rocked the new haircut yesterday. I should have debuted the new haircut yesterday. I got this cut like a day and a half ago. Or not a day and a half. Was it on Tuesday? No, Monday. I got it on Monday. So I could have rocked it yesterday. But it's a gay accent. Oh my gosh. But even if I didn't have my hat on, they censored me and Tanner. They didn't let Tanner's face get on the stream or mine. You've been hiding it for a day? Yes, I've been hiding it for a day. I feel like today was the right day to do it. Today, because honestly, if I had showed off my hair yesterday morning before Hood earnings, everyone would have blamed the haircut for the stock price being down. I mean, you guys are still going to blame me, but at least there's a little bit of time between both events. Today we all got a haircut. Yes, that was a zesty ass quarter. Oh my gosh, would have blamed you either way. Definitely would have blamed the cut. It's crazy because Vlad's hair is like super long now, and my hair was short. So we kind of exchanged haircuts. Centrist still down 19. All right, dude, I guess this is how the market's playing out today. S&P's literally flat. Your growth stocks are down heavy today. Hood, Shopify, etc. ASTS getting a little bid. Rocket Lab's down. Tesla trying to hold on green. If you were trading, obviously, about 20 minutes ago, that dip buy has paid off. as we are getting some V, even if not a full V shape, but some V on a few of these names. Hims, that one continues to get hit down 3. And then Hood, if we even close above 75, I'll be happy today. But that one's definitely holding on to an 11% haircut. Yeah, Amcor, a lot of these manufacturing plays getting some love, along with VRT on the data center demand. That's up 19% today. Reddit is weird, dude. Reddit right back. Dude, Reddit pumped to 155, 152 yesterday. And it's tough because, I mean, I saw a lot of people on Twitter excited about buying the Reddit dip last week on earnings, riding it up to 150. And they should be, right? Because you buy a dip, it goes up. Like, you should feel happy that you took advantage of a market mispricing opportunity. And then, boom, you're right back to where it was. Same thing with Shopify today. It's like you can't take any wins in this market. You can't even gloat about buying a dip because as soon as you do, that dip just reverses. I mean, Iran was at 46 yesterday, back to 41. Like, so many of the Nebius was 95 today. Are we at even 90? We're at 90.25. Like, so many of these names are meant to be traded. But trying to hold on to them and catch good timing is just not being rewarded for a long investor. For a trade, yeah, I mean, if you get the low, sell the high, then you're good. But if you thought you got Reddit at a deal at 139 and moved past it, it's like, nope, it's right back. Right freaking back. Same thing with Microsoft. If you thought you were going to get a deal at 420 after it fell from 480, you're right back down. I guess this is how the market is operating now. All right. I think that's it. I think we're done for the day. I think we are done, at least for now. We'll be back on the close. And App Lovin', that's the big earnings tomorrow. You look like a 1920s Italian gangster. Well, the amount of things you guys think I look like is pretty incredible. But overwhelmingly, I'm seeing from the chat that you guys like the cut. So at least I'm happy about that. Most of you guys are saying, like, I like it too, dude. It is a burden having all that hair. It's kind of nice to not have it. It really feels like, I don't know, it feels like a weight lifted off your shoulder, just not having to deal with all of it. Looks like you're ready for a High School Musical. Bro. I need to get recruited by Hollywood to do a stock market movie, bro. They need to make Wolf of Wall Street 2.0. I need to do that. That would be pretty epic. I need to figure out how to do that one day. You look like you're about to go to a boy band. Unk of Wall Street. Oh my gosh. You should go blonde now. Dude, I've never changed my hair color. Would be kind of crazy. Shem Pasta, thanks for the super chat. Uncle Amid, okay for the chat to address you as uncle. I guess so. I'm an unk who rants. We still need to make the rant intro, dude. We still need to do that. Also, let me say this now. If anyone's good at thumbnails, can you hit me up? Because Steve and I are looking for someone who can do really good thumbnails. And like, I played with Gemini. It's okay. I don't fully like. I want someone who can actually design good thumbs. So if you are, just hit me up on Twitter and we can pay you for the thumbnails. But we have a couple guests coming up and I would like to get some good thumbnails. So please let me know. All right. Word of the day. Word of the day. Next episode's coming out on Thursday, by the way. I think you guys will like it. It's a good one. I think you guys will like it. So that'll be out tomorrow. Yeah, that'll be out tomorrow. Wolf of Bali Street. That's crazy. That's crazy. Okay, word of the day. Let's see if we can go 2 for 2 from yesterday. Obdurate. Obdurate. Stubbornly refusing to change one's opinion or course of action hardened an attitude. Being obdurate in the face of new data isn't conviction, it's ego. Powerful word for the line between discipline and delusion. Look, I think based on this new update by Hood that allows you to take off the event contracts, Vlad's acknowledging pretty quickly to not be obdurate and not be stubborn. I do think there's a fine line between being stubborn and also like looking at a nuanced approach to an argument. And that fine line should be interrogated, especially if you're a well-rounded individual who's trying to create an investing thesis. But, if the users are saying we don't want prediction markets, I think I said this yesterday, Robinhood should give the ability to take it off. And it looks like that's what they're doing now. All right. How do you say this freaking word? Obdurate. There's no way I'm saying this shit wrong. Obdurate.
Obdurate.
Why is an OB an AAB? That doesn't make sense.
Obdurate.
That's like, no, this is. Phonics is a lie. I agree. This is stupid, bro. Every day, like, is it literally how I think of words, or is it just like the world not sounding the way it should sound? You're like 0 for 5. We crushed yesterday's, but it's like we can't get more than 1 in a row or 2 in a row at max. Obdurate. What's the etymology of this word? Etymology of obdurate. Let's see. Late Middle English, Latin. Of course, it's Latin. Past participle of obdurate, ob as an opposition, dure as in harden, which makes sense because that means you're stubborn. All right. That's the word of the day. That's what we got. That is what we got. We need prediction markets for whether Amit will say the word of the day wrong. Dude, if that was actually a liquid market and you guys could bet on that, you guys with this stream would make everyone money every day by just taking the under on that. All right, I think that's it. S&P 693. Going green for the day. Hopefully that continues till the end of the day. Carvana down 10% again. Did they make an AI vending machine for cars now or something? This stock's been crazy volatile. I don't know why it's down 10. I don't see any headline. They had a short report last week. Maybe that's coming back to bite them, but they recovered from that. It looks like they're now down. All right, so we're back on the close. We got AppLovin, we got McDonald's, we got Cisco. We have Grab, but that's at night. So again, Grab is not at the close. Grab is at 7:30. So we'll do the close. We'll take a break for like an hour and a half. Then we'll get ready for Grab. AppLovin is the most important one. Software, hopefully they don't shit the bed. And if they don't, we can keep it going from here. All right, that's it. Thank you, everybody. Appreciate the kind words on the haircut. It's 4 years in the making. And yeah, we'll probably style it up a little bit more and stuff like that. But that's what we got. Wow. CME exploring launch of first ever rare earth futures contracts. This is why this is why this market's bulled up, bro. Like if people are getting ready to trade futures on rare earths, it's not slowing down. It's not slowing down anytime soon. All right. Thank you, everybody. Appreciate it. I'll see you guys on the close. Bye, everybody. Have a good one.